Good morning.
Good morning, everyone. How are you all doing?
Everybody good? How are you, Anastasia?
Yeah, good. How are you?
Not too bad. I slept a little bit, not so good. I was doing like a coding marathon really yesterday, 14 hours.
Cool.
Last night I dreamt of code the whole time. Like, oh, that was not very good to do.
14 hours of coding is massive. I don't even know how you do that.
I don't recommend it. I'm not going to do that again.
I'm not gonna do it.
Good. So it's actually right now for me also kind of the first time I look at the markets this morning.
Yeah. Well, for me, I did have a look at the markets before. So let's see what happened since yesterday. We actually were looking at with Pedro on this continuation to the upside for S&P 500 already. And this is what yesterday got retested. So if you guys were watching that, we talked about this level and some of you might have marked it up, and that was a pretty good long opportunity here as well. So this was S&P 500, and NASDAQ looked exactly the same way. So I had exactly same level and the continuation to the upside from the previous high volume node here. So if you were watching, then some of you might have also, like noticed how beautifully this analysis worked out. I think equities today are quite tricky, let's say like this, because the market opened in the middle yesterday. Their seas of the fire got broken from the both sides as well. Trump is going crazy and losing it on his Twitter. Absolutely crazy. The world has never seen anything like this before with a US president. But I think equities are getting a little bit of a hit as well. Concerning this, although the NASDAQ on the CFDs is on the all-time highs, now futures still have some space to go. We do have the debates concerning the interest rate decision as well going on. So the interest rate, the very high chances that in September we're going to have the interest rate cut. Although the CME, I have to choose my screen. Anyway, the CME shows only 20% probability that the rate will be cut, at least for September right now. Although the Federal Reserve already mentioned that they are going to look into rate cuts if the tariffs effect is not gonna spiral out of the control. Although my personal opinion is that the realistic effect of the tariffs we're gonna only see in July. July, August, perhaps. That's going to be approximately 6 months since Trump got to the presidential office. It's going to be 3-4 months since the tariffs got implemented for the first time and announced. And that is usually how long it takes at least to see the first effects. So normally, anything that's concerning the inflation, it doesn't really get immediately. It doesn't affect immediately the market. It needs some time. It needs the reaction of the consumers, right? As first and foremost, the biggest vehicle of any economy is the consumer, as us, you guys, anyone in the chat as well. So how people are gonna get there and see the effect and feel the effect of tariffs, we're gonna only start seeing like a couple of months from now. So yeah, so I think it's going to be very interesting until September to see how it's going to evolve from now on. I'm looking for the continuation for the long for now for equities. Like my analysis since yesterday actually is exactly the same. So for the NASDAQ, I was looking today in the morning is that I'm looking for the continuation here. Now, if yesterday that was an entry point, then it can just continue to run. If looking at the new entry point right now, I would wait until the price probably gets outside of the consolidation first, then the retest, and then the continuation higher. On the other platform that is not now, so for some reason it's updating again. I'll open it afterwards. But what we see there is that we have the disbalance between the market sell orders and their price, because the delta is showing their movement to the downside. On another one, I'm going to show it later. And the price is consolidating, which means that despite the quite a big amount of market sell orders, the price is still being held back up from falling. So this usually is a sign of the manipulation of the market. The big market players do not want the price to go down. Hence, usually after this, we see the movement to the upside as well. And for S&P 500, I have the same exact situation, actually, same exact analysis, continuation to the upside. Again, it's consolidating now. So if holding it from yesterday, then can keep holding it. If looking for the new entry point and for the adding up to the running position, and I would wait until the price gets outside, gets some kind of retest. Doesn't need to be the retest to the high volume node, but some kind of maybe also like small something and then continuation. So the moment the price exits this, I'm going to be looking for a continuation to the upside. Don't like trading inside of the range itself.
So yeah, but it's interesting how we are holding up. No, I mean in the S&P 500 we still have some points, pardon me, to go. Over the last all-time high, NASDAQ is a little bit closer. I'm actually not sure if we surpassed it yesterday. Did we make a new all-time high? Or?
We did on the NASDAQ.
We did on the NASDAQ, right? But not on the S&P 500, no? And yeah, so what is interesting, what you said just now about inflation. My God, so loud outside here. I don't know if you guys can hear that. What is happening there? Sounds
just
like
a little.
Somebody. Anyway, so what you said just now about when are we actually going to see the consequences, the effects of a tariff, very, very true. First of all, indicators like inflation are always heavily lacking indicators because we are always comparing one time period to the period a year ago. So we probably maybe January, February, more like March next year, we are going to maybe start seeing the effects of it. What is, like you just said, looking at something like consumer confidence can give us an early picture of what is going on. Because if we see consumer confidence like being at a more low point, and we saw it at the lowest point not long ago in the USA, then that means that probably you are going to have something like inflation following up for that. I want to actually, because it's very fitting to what you were saying, share a chart with you there. Hold on. Here we go. So I'm going to remove me and add you of something that's like my go-to long-term, or let's say like one of the timings I like to use in long-term stock analysis. It's when you compare how did the S&P 500 perform under the last three presidents, one of them, of course, also being Donald Trump, and how we are performing right now. So the green one was Joe Biden. Now, it's not absolute numbers. It's more of a chart pattern that we were seeing there. So don't get that confused. Then we had the first term of Donald Trump in the middle in orange and Barack Obama in blue. And we have seen a large deviation, actually. So I updated this chart with this year, actually, a couple of months ago, where we had the worst first 5 months stock market performance in comparison to the last three presidency. But the pattern that's the most important, at least for me, is that almost under every president, you can go further back, of course, and analyze this further. We have this 1 year after the election. So election, I mean in November, not when the what is it called, inauguration or whatever it is called in English is. So not talking about February or January or whenever that was, but the last, when Trump actually won the election. So that was November 5th or 6th or something like this, or November 4th, I think it was. So if you measure from there, how does the stock market perform after this? You always, or most of the time, see that pattern that we have 1 year of really solid stock market performance, and then things start getting a little bit choppy for 1 to 1.5 years until we see a boom again. Trump, with all his talks, not only talks, with all his actions about tariffs, was a bit the exception from this, but of course has been catching up to that performance lately again, because we have seen, to the surprise of many, me included, this V-shaped recovery of the stock market right now. So it is to be expected, in my opinion, that until late Q4 2025 or somewhere in Q4 2025, maybe even early 2026, we could see a local peak in the stock market until things then get a little bit worse. And that could actually be the case, because then we see for the first time in hard numbers, in hard statistics, the effects of a tariff on the US economy. So there might be some nasty surprises in. It's also coincidence and very nicely with the long-term pattern of Bitcoin, right? Where we also kind of can expect, well, the bull market, this should be the last of the 3 years of bull markets. Yeah, we always have this cycle since 2011, 3 years bull market, 1 year bear market. And according to what at least I have been saying for a long time now, we should see the bull market coming into an end also somewhere late October, maybe if we extend a bit also Q4 2025. So it all points, in my opinion, into that direction, that there we are going to see some peak, and then things might get, at least for a year, a little bit more difficult.
I think so too, yeah. I think so. I think he's you know how this is really interesting, how he was blaming Joe Biden for having a bad effect on the market.
Yeah.
And I think he's he's a very good businessman, but how
Is he though?
well, he was, at least in a sense of like he was like thinking, you know, the business kind of thinking. However, if we are talking about like the inflation, I don't think he actually is realizing which effect tariffs are going to have still.
It's he doesn't know what inflation is. That's the problem, you know. I mean, if you go in front of a camera and tell something like, well, the Treasury Department just called me and they said there were 85 billion US dollars coming in. Where's that coming from? And I told them, yeah, that's the money coming in from the tariffs. I mean, that's BS. No, come on. It's like, he's a salesman by the end of the day. You know, if you want to say it in a bad way, you could say he's a con man. Let's call him a salesman now. But I mean, this is what we are dealing with at the moment. And yeah, it's going to be interesting how this is progressing. Before we continue, by the way, guys, you see that on the screen also, giveaway link pinned in the pinned comment. We have a giveaway currently running where you can win a couple of high stakes account here on the The5ers. You'll find a link in the description of this video, of this live stream, which leads to a platform where you can enter that sweepstake. You can get additional chances to win if you subscribe to the channel, especially also if you like the stream. So that's, of course, the thing you should do right now. And then on the, I think, Thursday afternoon live streams, we are going to live draw the winners. So make sure you have registered. Make sure you're joining the giveaway. 10K high stakes account on that giveaway. And how many subscribers do we actually have already? Are we already above 75,000? I haven't checked today.
Well, we were not in the morning, at least.
Okay, so but we must be very close. If we manage to get 75,000 subscribers for our YouTube channel this week, then once Jonathan is back from his holiday next week, he's going to bring along a very nice and big giveaway again. So we are having giveaways this week. We are hopefully, by the looks of it, having a giveaway next week. So if that is not one more reason, you know, to join and watch and be with us here, I don't know what else to say. Yeah,
we are at less than 100 subscribers to 75,000. Guys, please subscribe to the channel if you haven't done it yet. And if you have any colleague traders, your trade friends, let them know that we are streaming here from Monday to Thursday every single week. So make sure that they also can join. You know, we are building the really great community of traders here. We appreciate every single one of you here on lives with us, coming here every single morning. We see the names. We see that you guys are here every single day, and we really, really appreciate it a lot. So let's build the community. Invite more people, make sure that subscribe, and Jonathan is going to bring a really huge giveaway for you next week. You do not want to miss it out.
Maybe some nice Swedish köttbullar, who knows?
Maybe.
Time for me to go to IKEA for lunch, I think, today. Now I'm getting hungry.
Someone was saying, Earth was saying how he bankrupted 3 casinos. How can a businessman do that? He actually he went bankrupt 6 times, Trump, in his career. But what I like, you need to also realize that if he would be a very bad salesman, a very bad businessman, he wouldn't be where he is right now with the amount of money that he has. So we can look at it from the perspective of how many companies he bankrupted and the way that he did it. On the other hand, he managed to establish himself and his family very, very strongly compared where like he comes from as well. So he's a very good salesman. He's a very good in talking. At least he was. I don't think his brain is braining recently, to be honest with you, especially looking at the Twitter posts. But definitely, I don't think the effects of the inflation are something that he thought about in the tariffs. Well, let's see. It's going to be an interesting couple of years ahead. Well, we can already see that happening.
Yeah, especially for us, if you are trading, or let's say like scalping, day trading, it's always can be quite dangerous because you're in a position and suddenly you have Trump tweeting something or saying something in a press conference, and then the market just goes crazy, which of course is a situation, where you can analyze as much as you want. It makes usually the analysis you did before based maybe on technical indicators, price action, or whatever you might be using obsolete then. So something to keep in the back of your mind. We like volatility, but sometimes reality catches up to analysis you can do, and you don't want to have the analysis paralysis, then meaning that you think like, oh, the market is still going to do what I want the market to do, and it's just a matter of time. Be careful with that. Nice comment here. Anastasiia, I finally went through your volume footprint post in Alpha Beta stuff. Powerful stuff. I have that actually on my to-do list, on my bucket list as well. I want to go through that as well, so I can finally learn something about volume analysis as well. But if only the day had more than 24 hours.
I'm really looking forward to your feedback, so let me know when you do it. But Fabian, thank you so much. I really appreciate the comment. It really means a lot to me. Like, I really love to receive these comments. It gives me motivation to post more things like that.
Definitely should. And if you guys don't know what we are talking about here, what Fabian is referring to, go to Alpha Beta Labs. You can just Google that also and sign up there, and there you'll find free courses. For example, on volume footprint analysis. There's one course on trading gold. There's one course on technical analysis from Jonathan. There's one on fundamental analysis by myself. So really cool stuff there. There are couple of thousands people registered, a lot of traders talking live, so definitely something you want to check out here in the ecoverse of the 5ers.
Absolutely.
What's your opinion on gold right now, Anastasiia?
I haven't looked at gold yet because yesterday it was dropping still. I saw it was recovering in the morning. Let's have a look at it. Slightly, yeah, I'm still bearish on gold. So normally what I was looking at a couple of days ago already, since Monday, is that we are going to see the retest of this volume area here and the continuation to the downside. I'm still waiting for this. We did have an attempt to go down, and we rejected the same exact volume zone as here. So that this was the same zone that was holding the price the first time it came closer to 33.22 level, and now the second time. I don't really think that we're gonna see the continuation to the upside yet. We did break the lows as well, which was basically the level of buyers that were pushing the price up being broken. If we get closer right now, it's not the time yet for me to enter the trade yet, because we are above the weekly point of control. So the point of control of the week, the maximum volume for the past 2.5 days so far, 2.5, is 33.42 on the futures market. And here is the developing point of control. So I will be waiting until we break this to sell gold. And now I'm going to bring it up on my futures chart on the second one. And let's have a look at it as well. So this right here. There we go. So this is something I'm looking at as well right here for the futures. So this is another platform I'm using. Normally, this is where I trade. If we place our volume profile over this move to the upside here, we will see that we have, well, mainly two big volume zones. One is this level 33.44, and another one is basically 33.55. So this zone here, unless we break this higher, I'm mainly bearish on gold. We did reach one of my very important zones here. If I go short on gold, I would be probably exiting around the level 33.15. 33.18.5, or at least be very careful. I do have the level at 32.92.95 here that I'm normally initially targeting. It's one of the big volume zones here and the previous lows as well, from what is it even, from the end of May. So if I'm going to be selling gold perhaps today, maybe again, then those would be my targets, but I would very closely watch this zone as well for the reaction. If the price starts returning here, I'm going to be also exiting the trade. Now let's have a look at the 5-minute time frame for gold. Where is it? For me to close the chart. Anyway, so let me just do this. This is euro. Let's bring up gold. I want to see the current order distribution, basically. So that was, yeah, that was the 30-minute time frame. Yep, what we see here, that's another confirmation for me for a sell currently, is that the price has been consolidating for the whole morning. So the price hasn't changed. The price level was exactly the same. So we were between 33.41 and 33.49. In the meantime, during the day so far, during the opening of the Asian, right, and the beginning of the London session, the delta was rising, which means that we have lots of buy by market orders entering the market. And normally the buy by market orders are the orders that push the market higher by default, right? Now, if the price is held here, it means that we have a big wall of sell limit orders above the current price, which is absorbing the aggressive activity of buyers and not letting the price to go higher. So I would be expecting the sell. Very risky one if I would sell right now, probably. But if I'm going to wait a little bit longer until the price at least breaks the levels where it is at right now. So where are we? Here, this high volume. Yeah, if we go a little bit lower, 33.38, candle can close there, I'm going to be entering short on gold. So that's my idea of it. What's your perspective on gold today, Dirk? I think you are muted.
I am muted, yes. Hold on, let me add myself here. So for me, what is interesting actually on gold now, if I look at the daily, are two things. First of all, we are kind of struggling to get under the blue moving average, which is my precious 8 weeks moving average, daily chart, but weekly moving averages. Wait, or am I telling you something wrong right now? Weekly, yeah, thank you. And so because this is same like in Bitcoin, very often a pattern we see in gold that once price manages to go under the 8-week moving average, that it likes to either return immediately to the bull market support band, so the red and yellow line here. You saw this, for example, here. You saw this again here. Or it kind of goes into an extended period of compression. So it's a little bit of a volatile sideways move where it waits until the bands are catching up. So we saw that, for example, in July of 2024, or actually in the period from April to July of 2024. And it seems to me a little bit we are in a period like this again, which is of course normal because we have really a strong uptrend for the past 2 years almost in gold now, and of course price sometimes needs to consolidate. And what is very typical for gold is maybe if I mark this here with trend lines, are these compression zones where gold moves sideways. Yeah, if you are like into sharp patterns, maybe you could say these are triangles or ascending or descending triangles or whatever. I'm not so much into these patterns, but maybe you get what I mean. So for me, I like to call that a compression zone, where after a strong move to either the upside, can of course, if it's an asset that's in the bear market, also be to the downside, you have a period where the momentum changes more to a sideways. So where the market needs to decide then, do I want to continue up or do I want to change my fundamental market structure and go down? So my expectation now is that either we are going to stay within this pattern a bit until we see the bull market support bands catching up, and that could eventually extend well into July until this happens, or we are going to see the price of gold dipping down to the area maybe of 3,250, 3,200 to touch the bull market support bands. Then we could see something like a V-shaped recovery, or like the price slowly making its way up again. If we really break down, so if we make lows lower than what we saw here at around 3,100 and something, then we would actually need to think about, is this a reversal structure? Is the fundamental market structure changing? Are we going into, for example, a more short-term bear market trend now for gold? But in order for that to happen, I really think we would need to see a very strong outperformance of the US stock indices. Normally, it's kind of unique to see that pattern that we've had for quite a while now, that we have rising stock markets and a rising gold price at the same time. You know, when I started back in 1998, for the next 10 to 15 years, it was always when gold goes up, it's a risk-off move, means indices are going down, means people are buying dollar. Vice versa, if gold goes down, you probably have money flooding into the indices. So it's a little bit off. Shows also how gold has really become, this safe haven asset of last resort. Maybe because people don't want to be always just in the US dollar anymore. I don't know. Honestly speaking, it's quite unique what we are seeing there. But yeah, if you're trading gold, it might be kind of a good area for buy, but I'm with Anastasiia here. I would wait a little bit longer, but you're more looking for the short side, no? On gold, you said just now?
Intraday, but I'm looking intraday.
Yeah. Okay, so, intraday.
But yeah, long term, I definitely will swing. I agree with you on the long.
Yeah, so I mean, intraday is interesting. If we establish ourselves below, what is that here, 3,316 roundabout, that could be a nice short swing trade eventually. I tend to agree with you there.
Yeah, I'm looking for the long as well after the price reaches one of those zones that I'm targeting. From there, I would be looking for long-term buys. So I think we have the similar bias. You're just looking from the bigger perspective. I'm just looking the microscope.
Yeah, I mean, I'm looking also at the microscopic, which also, I mean, we have like this mini bull market, which established itself. I had the first buy signal when I was already sleeping at 12:30 last night, and when it continued to buy my system there. But I'm not so sure if it would be wise on a new signal now to buy anymore, because like I think I said this also on Monday, we very often see this flattening structure. No, this is also like going into compression mode again. When a trend starts, you usually have quite a nice momentum to the upside or downside, in this case to the upside, and then over time it starts to flatten, and this is exactly what we are seeing here. So I wouldn't be surprised, actually, since we have this interesting setup now for the indices also, where potentially we could see the S&P 500 going to a new all-time high. Potentially we see the NASDAQ establishing itself now at the new all-time high. There might be a lot of institutions still who missed out on this run. I don't think, even if we look at hedge funds, if we look at mutual funds, that people were really expecting that we would see this V-shaped recovery. So I'm talking, let me quickly get the NASDAQ here. So I'm talking here about this shape, like the people from the more institutional scene that I talked about, nobody was expecting that. They were almost all of them more banking on, okay, we're going to see falling markets because the talk about tariffs is going to get worse and not better. And they were surprised by this. And I mean, if you are a fund manager and you've been sitting on cash and now your clients see, well, you've been talking about stock prices further falling, and since you talked about this, the S&P 5, the NASDAQ has been rising by 31%, you're in big trouble. I mean, explain that to your clients if you run a stock fund, is stock mutual fund that you are sitting on cash and missed out on, let's say 31%. It's probably not going to be like this for everybody, but I can imagine if we really see the market today and tomorrow possibly strong moves in stocks again, that there's going to be a little bit of FOMO in the institutional scene, like the FOMO we normally see in cryptocurrencies, right? And if that happens, then we could see also some pressure on gold further. And what we know, for me, gold is always like the Bitcoin of legacy assets, because it has as crazy moves as Bitcoin. Probably if you're trading gold, you have experienced that yourself quite often already, that you are in a position, you are actually betting on the correct way where that the gold price is developing, but you get stopped out because of the crazy VIX we see sometimes for gold. So quite a difficult asset, in my opinion, to trade intraday. By the way, do we have anything coming
gold
out
right now? Dropping, so I'm looking for a sell when it's.
You're looking for. I think you might be correct there that way, especially if we see strong stock markets. I think we are going to see later on pressure on gold. As a matter of fact, it's coming down now already a bit.
Yeah.
So pullback now to 26, 27 could actually be quite a nice short entry there as well. Tight stop there. Let's see. Maybe we get something during the next 20 minutes still.
Yeah, if it gives a small little pullback, that's literally what I'm going to be waiting for.
Exactly. And take it from from Fabian Daniels. Don't forget to hit that like button. Yeah, and remember again to enter our giveaway. You'll find the link for that in the description of this video. And also remember to subscribe to our channel. I need to update here. Let's see how many subscribers we have. We have 75,000. Now
we have 75,000 subscribers.
We have 75,000 subscribers, guys.
Let's go. We did it. You guys did it.
So nice. Wow. Thank you so much, guys. Thank you so much, guys. That is quite something, really. 75,000. So now we need to see the little Donald dancing there. Nice. Wow. I love it.
That's nice. Guys. Thank you so much. Yay, let's go.
We are going to have a big giveaway when Jonathan is back. I think he'll be very satisfied to see. Exactly. 100K is the next stop. And if I'm not mistaken, 100K, you get this nice YouTube plaque, to put in the background then as well. So that's something, no? Nice.
So Jonathan is going to be very happy. And all of us, well, you guys are going to get a huge giveaway for actually bringing that channel to 75 subscribers. The next stop is going to be 100, and then it's going to be an even massive more gifts for sure, because Jonathan is going to be super happy about that. But as so far, don't forget that we also have giveaways daily this week. So Monday, Tuesday, Wednesday today, and tomorrow Thursday. So the giveaway link is pinned in the comment and in the description to this video. So you go follow the link and you fill in the small questionnaire. Please do not ask us in the comments what is the answer, because if you are a trader, you know the answer. Those are the trading related questions. So fill them in, and you're going to be a participant in our giveaway drawing, which is going to be happening in the second half of Thursday. So all 4 winners are going to be announced then from Monday, Tuesday, Wednesday, and Thursday. So make sure that you apply right now, and also join us tomorrow, because then you have more chances to win the prizes. Yeah. Dirk, you are still muted.
I wanted to do like a clean streaming etiquette, mute myself before I type something. Otherwise, you hear always the click, click, click in the background. But yeah, jokes on me. Luckily, we have 2 people here. Imagine how long that would have taken me otherwise to discover that I'm muted.
That's okay. Everyone has. I also do this sometimes.
So what else to look at? I heard somebody mentioning euro dollar, for example, or do you have anything interesting you're seeing?
Yeah, I'm looking for gold right now. So I'm looking for the entry for from the current level already for a sell.
What is that? What we are seeing though?
That is
so complicated.
That is food.
Food.
Which is the footprint.
A footprint.
That's what they're like the thing in ABL that I was posting, the guide on ABL is about. So if anyone wants to understand that, this is in ABL, you go there, it's for free. It's in the strategy library. So you can go there and find all even from the very, very beginning. So if you've never seen it and you feel so super confused now, don't worry, because it's explained really from the basis, foundational knowledge about the order distribution, and then leads into the footprint. But essentially, the long story short, it shows us how many asks and bids are traded at every single price level, so every single tick. And we can see right here that we had a whole bunch of volume. So the upper part of the candle is quite empty. The bottom is also empty. The middle is quite bright green and red, which means that we had lots of volume and amount of contracts traded there. So this zone here, I'm going to be expecting to hold the price now for gold. And if not, then this zone here. So my stop loss is going to be going above those previous highs for gold. And I'm looking for the continuation to the downside so far, which is happening. So
it is happening. Yeah.
That's pretty much the analysis we were doing with you before. So where is our here? So that's my next level that I'm going to be paying attention to is going to be 33.18 and then 33.15. So this zone here. And if you get there,
are you trading the futures contract there?
Mm-hmm.
Yeah, okay.
Yeah.
No wonder.
I trade both futures and I trade also CFDs, but I do my analysis on futures always. Because
which makes sense because you have the volume, no, and the order books.
Yeah. On CFDs, you cannot basically access this data. It's not going to be relevant. Like TradingView, for example, recently introduced this footprint that they have on TradingView, which is for like extra subscription. I took it and it was completely wrong. Okay. Because the way they calculate the order, like the orders and the volume is different. So for this kind of analysis, it's better to use a centralized exchange.
And which one is this? The Chicago Board of Trade, or which one is that?
Yeah, that's a COMEX. Yeah.
Yeah, or COMEX. Yeah. Okay. Yeah, I'm looking at that right now here on. I'm seeing that for Bitcoin also on TradingView. Yeah. Well, there's no way around it. I need to look into that because it's kind of interesting now that we are seeing. Hey, we are both like more looking short term on the short side of gold. If that aligns like with what I'm seeing on my chart, it's like an additional tool for confirmation maybe that I could implement. So that of course is very interesting.
Yeah, the reason I'm using it is because it allows to see the momentum, the current order distribution. You can see when the sellers and buyers are taking the control over the market. You can see who is now pressing on the price. And as you can see now, this next footprint is mostly red. And we have more and more sell orders coming in the market or at the bottom of the candle. So the bearish pressure, the bearish momentum continues. So the moment the footprint turns into red, for example, and the price starts going down, is usually as a sign of the bearish momentum, at least for a while. A footprint is a very short-term confirmation. So it's in the moment. I usually combine it with an analysis from the higher time frames. So the 4 hours and 30 minutes, I find the direction, and then with the footprint, and even the zones for entering trades and the reversals, I still use 30-minute time frame for that, determining that. But then footprint is confirmation on whether it's already the time to enter the trade or should I wait a little longer, which allows me to miss out on less orders. And it also can help me to exit the trades earlier, for example, if I see something is happening without losing the profits that I make. So, for example, if now gold is coming here and I'm going to see the footprint like reaction turning green and we're going to see the spikes of buy orders, market orders entering the market, I'm probably going to exit the trade.
Interesting. Very interesting. I saw a question from, where is it now? Here we go. I don't know if you can answer that, what the delta of the last two candles is.
Yeah, of course. Well, I cannot, but it's calculated, of course.
Yeah, okay. that you're not calculating that in your head on the fly. I think we all can understand that.
Well, the current candle is still being formed. The last one is negative, essentially minus 55 contracts, and another one is 185 positive, although the price went down, which is another confirmation for a sell. Because although we had majority of the buy-by market orders, the price was still failing to go up and still was a bearish candle afterwards. So there was a divergence between the delta direction and the direction of the price.
Buying in that case means like opening new long positions, or because buying can also buy to close, no?
Buying in the sense of delta only counts for the market orders. So it's buy by market orders minus minus sell by market orders, ask minus bids.
So actually, so you could see something like the pressure is on the downside, the delta is still positive, means traders are buying market, but let's say the support or whatever is still failing. So the likelihood that they need to sell again or be stopped out of the orders is increasing. Am I interpreting this correctly? Interesting. Yeah, that's actually a nice kind of extra layer, like to watch price action in 3D as a tool of confirmation. A bit like what we see in on-chain analysis for Bitcoin, for example, as well. Also gives a different spin, if you look like how many active addresses are there, how many hashing powers, where's the Z-score, and so on and so forth. Interesting. This is always amazing, like even after doing things like for such a long time, there's always something new, a new way to look at price, a new way to analyze the markets. I
really love this thing about trading, to be honest with you.
Makes you wonder what's happening in the next 20 years, no?
It's never boring, that's for sure.
But probably in 20 years, you're not going to see Anastasiia and Dirk sitting here, but our AI avatars, because we've uploaded our brains into the cloud or something.
It scares me sometimes.
Me too, yeah.
Crazy.
Or we are all pets and slaves of the machine gods. Yeah, so nice. I'm actually now for gold. Let me illustrate that here for you. Where's my gold chart? This one here. So is that the correct one? Sorry. Come on. Here we go. Now I have the correct one. Yeah, this is the correct one. So for gold, actually, I said we had the flattening here. So it would be, there's a high likelihood that within the next minute I might get a sell signal for gold. And usually this will happen when we see a bit of a pullback again, and then price starts to decline again. This is usually when my system starts firing sell signals then, which would be nice. Good trade here. Let's say if that happens around the area of 25, if gold doesn't go straight away down, that is, of course, then I potentially could have a $10 stop somewhere at 35 or 36, and plenty of downside, potentially even until 3,300. I see that as a possibility for today. But let's see. If I'm unlucky, could of course be that the price goes immediately down and that I kind of miss my entry. But if there's one thing I've learned over the last couple of months when it comes to trading gold, is that you have to stick by your rules. Don't FOMO into a position just because it runs into the direction, because very often in gold we see kind of fake outs also. So you see for a very short period of time pressure on the market, for example, pressure to the upside, pressure to the downside, and you think like, I need to enter that trade now, and then you catch the top or the bottom in a bad way. Like for the short position, you catch the bottom, or bad entry for the long one, the top. So also a bad entry in that case. So stay patient. Why is my Bitcoin chart?
For gold as well. Have you noticed that, Dirk, that the price usually returns to the same level for gold multiple times?
Yeah.
That's the same level. So that's why people are so scared to miss out on the entry, but majority of the times you're gonna get the second chance with gold.
Absolutely, yeah, absolutely.
Yeah. Well.
here we go.
What is going to be your entry confirmation?
That one is complicated. Without me wanting to give away too much of that, is a mixture of there in the background moving averages which are applied, and my system measures the slope of the moving averages. So there's an ideal window of a slope that you want to see when the price starts picking up momentum. Plus, there's a database of price action patterns, not the usual one like outside bars or engulfing patterns, stuff like this. It's really like multiple candle patterns, although this is a Renko chart, of course. And if that aligns, if all stars align, when you get a buy or sell signal, it's a crazy amount of code.
Yeah,
that's behind that. I used to do that in a manual way. Which is like so inconvenient because it's complex, and until you find the signal, it was for me often much too late. So that's why I try to put it all into code. It's working quite good now, in my opinion. Also, the next step now is I need to automate this whole thing and connect it to the MetaTrader 5, to the evaluation account there, for example, because I mean there are only so many hours every day that I can sit and look at charts, that I'm willing to sit in front of my screen and look at charts. I mean, if you scalp or something and you are staring at charts for like 2 or 3 hours, at least I don't want to do that anymore. Like my brain starts spinning then very fast. And of course, I have other things to attend also too. So let's see. I'm really looking forward, once I've implemented this as an expert advisor, to the MetaTrader 5, and then we can live track it for an evaluation account and share with you guys how that one is going.
Wow. Yeah, it's we as human beings, I think we can only make so many quality decisions per day. And if you have already other responsibilities in your life and you still need to do trading in the meantime, it just becomes too much. And somewhere we're going to make a mistake. So if you have the way to minimize the possibility that the mistake is going to be in trading and you're going to lose money on that, why not doing it? I mean, for me, it's super complicated. I can't even imagine start coding is going to be like forever.
Yeah, it's not with the help of AI. I think nowadays everybody can come to a good solution without needing to know like extensive JavaScript or Python coding language skills. However, it's like I don't recommend really, if you're like very new to trading, if you're very new to the financial markets, I don't recommend thinking about how can I create a bot that trades for me, or where can I find a bot that trades for me. The second, finding a bot that trades for you is it's very easy to find those bots. You just need to Google that, and basically the first 100 entries are probably all going to be scammers that want to sell their bot to you. Why would they do that if they have a profitable bot? You need to ask yourself. And even if it is a profitable bot, they can turn it off at any time, and then you are standing there and you're back to square one, because you don't know the bot is a black box. You don't actually know what it is doing precisely. So once you cannot use it anymore, you haven't actually made any progress as a trader. You might as well invest somewhere in a hedge fund or mutual fund with probably also better results. So what you need to do is, at the first step, I think you need to understand really how markets are moving. You need to go through this process of drawing all the trend lines, of drawing support and resistance. And once you understand, you get a feeling like, for example, how gold, how euro dollar moves. And start there with a daily chart. Don't like go right away into the 1 minute or 5 minute chart, because there's a lot of noise there. Or do something like Anastasiia said earlier. Look for the patterns at higher time frames, maybe 1 hour, 4 hour, 1 day, and then look, if you find there's something, how is the market behaving on the lower time? On the lower time frames, 1 minute, 5 minute, 50-minute charts. This is how, from my understanding, you are doing that, Anastasiia. I know, for example, Victor works like this also and is very, very successful with that. And once you understand that, once you also understand really how is price actually how come the price of gold is like it is right now? What is happening then with Bitcoin? How come the price of Bitcoin is where it is at the moment? There are order books there. It's a bit like, when you go to a wet market, price is always where supply meets demand. It's nothing else if you trade any other assets in this world, with a few exceptions maybe. But you need to understand this, because then you will automatically also, for problematic solutions that will come when you develop your own trading strategy, you will find more easy solutions for that. And then, once you understand that, once you get to the stage where you have a feeling, I feel pretty comfortable about explaining what is currently going on the market. I see them gold. We have a micro bull market structure. Looks like it's now changing into a micro bear market structure. Then you can start building and automating your own trading strategy, building your trading strategy, back testing it. This is wonderful possibilities using language models like ChatGPT, like Claude for that nowadays. You can download all the data you need for that here on TradingView. If you're using TradingView, I guess it's the same on other charting platforms as well. And then you will already be farther down the road to becoming a successful trader than 98% of all other traders. Because we are still dealing with a market here where 95% of people who start trading are losing short to mid to long-term money. And if I say losing money, I say losing all of their money. I guess that's also why the 5ers are called the 5%ers.
Exactly. I found it a really cool name, actually, when I first find out about
it. Absolutely. I loved it when I heard it also. Because when you have been in trading for so long, you know exactly what it means, that name,
Yeah, absolutely.
Yeah, for things like this, it's best just Google it right now. We might have also instructional videos for that, but I cannot promise you when. But this is, if you Google something like this, it's like easy to find help.
I mean, like, Dirk, you're using AI to code. Yeah. Someone can definitely use an AI to ask how to connect EA to the trading account.
I think if you just exactly that question posed to ChatGPT, you will get a very comprehensive answer with the individual steps on how to do that. This is exactly what makes those language models so great. No? When you Google something like this, you have like sponsored content for the first 10 things and advertisement and so on and so forth. So it takes a while to actually find something that helps you. Language models, ChatGPT, Claude, AlphaSeek, whatever you're using, they tend to give you a direct answer quicker than Googling things.
Yeah, definitely. What is your view on EUR USD today? Because we had several asked questions about that.
Yeah, I saw that earlier as well. Let's go in there quickly. So in general, excuse me, we've spoken about the DXY, the US dollar index, and all the subsequent pairs. Might, of course, as well look at Euro US dollar instead of a DXY. But from a more broader perspective, DXY, I said this on Monday already. For me, the trade over the next 3 to 6 months to be in is more shorting the US dollar. I don't think we are going to see a very strong performance of the US dollar. And this is, for me, the critical level here to watch, if you watch the DXY, is really 100. We've established ourselves, in my opinion, now. Looked a little bit 2 days ago, so that was on Monday when we were streaming, like we want to attack it again. But now we can see, for example, dollar yen, which is one of the trades I'm in at the moment, again, if you're into price action, you probably could interpret this as a hammer, pin bar, whatever the name for a candlestick pattern like this is, exactly on the bull market, or in this case, bear market support bands. So that could be an indication from a price action level that we are going to fall further. Especially dollar yen, I did like extensive research and analysis and created a forecasting method based on where are the treasury yields at the moment for the US dollar in comparison to what we see in Japan. And everything I got from the points at that the fair value for dollar yen, for example, is around 130 to 135 not US dollars, the exchange rate of 130 to 135. So we're still far away from it. That doesn't mean we need to go there directly, but that is kind of the target for the next 3 to 6 to 9 months. And we should see that also actually then in something like euro. I mean, we can see euro US dollar, basically the inverted chart of the DXY, right? So I don't see anything really that should keep us very much over the next couple of months to head back to the area of 120. Let's quickly see what the Fibonacci's are doing. Still a little bit of space. I mean, I crudely drew this now. Roundabout at 117.32 is the 78 retracement. The retracement from that whole Corona move we saw, where everybody was buying the US dollar. Where basically buying the US dollar was the hedge against everything risk on. You would be buying US dollar instead of being in the NASDAQ, instead of being in the SP 500, instead of buying Bitcoins or any other cryptocurrency. And it took us quite a while. The 61, for me, always amazing, especially the 61.8 retracement on large moves, how the price reacts around it. It took it quite a while to establish itself over that. So next target for me would be around 117. Now, I'm not saying this is going to happen today or tomorrow, but if I would look for swing trading positions right now in euro dollar, I would kind of try to see where are good areas to buy euro, sell dollar, so long euro dollar. And for that, for example, I don't know if you can do footprint analysis on euro dollar, because you need volume data probably for that. No, it's kind of difficult. You're muted.
See, I also do it sometimes.
See.
For euro dollar, you can actually, because you just need to take the 6E futures contract. And you can do the same analysis for the volume, for the footprint.
Oh, great. Do this, or you could do something like Victor does with the Quasimodo structures he's looking for. So will be for sure interesting later on also what Victor has to say about euro dollar today. And yeah, I mean, there are many, many ways to find something interesting. I mean, you guessed it probably already. This is kind of my way of approaching also where could be potential intraday trends that I like to do, maybe because I'm such a fundamental guy for most of my investments, this top-down analysis. How's the whole picture at the moment, and then work my way towards the microstructure of the markets.
And I think that makes sense, right? The top-down analysis, I think, is a must, even if someone is a scalper, to be honest with you, because a lot of the times people are like, oh, I'm a scalper. Why am I going to do the top-down analysis? Why am I going to be from the bigger perspective? But then you don't know which are the zones that you should be looking for trading and where you should be staying away. So even if I'm looking for the very short-term trades, I still do the full analysis. So I completely agree with you on that, Dirk. I'm on the same page, because then it gives you the confidence and the clarity where the direction is, which direction you should be trading, what's the preference, the current moment, short or long, and then I know that in this range I can do some trading, in the direction of current trend.
And you make your life so much easier also, no? Because when as a scalper, it's like one thing, when you try to scalp against the major market momentum, not momentum, the major market trend, I would call it more, which you can see from a daily chart, like I'm looking here at euro dollar, where you say, well, I mean, if I just show you this part of a chart and I'll ask you, what is the major trend we are seeing here, you probably would say, well, it's up at the moment. Of course, with pullbacks in between, but if I want to go with a major trend, I probably make my life easier, at least for swing trades. Maybe if you're really scalping on the 1 minute charts or something different, but maybe even not. Make your life easy or easier. It's hard enough as a trader anyway already. And don't try to be the contrarian. This is also one of the major mistakes I see really from beginners. They always try to be the contrarian and try to time the top or bottom of a market. I'm not saying that's not possible. I used to do it myself, as I said, Monday on gold as well, until I saw it's not really working, at least not for me. But it makes your life much more difficult. The moment I changed my goal system to a trend following system, my blood pressure normalized, and I got more sleep and just had an easier life.
I love the part about the sleep because we've all been there, as traders.
Absolutely.
I think we've all been there.
That moment when you wake up more in the morning, you take your mobile phone, you go, please, please, please. I hope it did not run against me.
Yeah, like if in the morning, sometimes you wake up during the night and the first thing you grab is your phone, and like, oh, how my trade is doing.
I'm forcing myself not to do that, right? I look at the time, but I'm really forcing myself not to turn on my mobile phone to see where prices are, because I know I'm not going back to sleep then anymore.
Yeah, no, I never look at the charts and over the night. Besides Sunday to Monday, like it's not even an option for me. I figured out my best times to trade, and I'm trying to stick with that. So
exactly, yeah.
It's a bottomless hole. You can trade 24/7 for 5, right? The crypto 24/7. So there's always something. It's very easy to get touched and addicted to the charts and adrenaline.
And it's for me, you know what is also funny? All those social media accounts of mostly young people who like pretend they are such hustlers. And I get up at 4 a.m. in the morning, and then I do 2 hours of workout. Then I go for a run, have an espresso for breakfast, and then I work 16 hours, non-stop. It's all BS in my opinion. The older I get, the more I realize that there's a time window maybe of 3 to 5 hours, 5 hours max per day, where you really can get productive work done. It doesn't mean that sometimes, I said that in the beginning, you can have like long days where you're doing stuff. I just said in the beginning, yesterday was like a 14-hour day, but you cannot do that every day. Normally you have like 3 to 5 hours where you can be really productive and get things done. And apart from it, and if you try to pull off those 14-hour days with your routine, whatever it might be, like every day, you're going to burn out anyway very, very quickly.
Before I was that person who was only working and gym and 24/7 like this, very short amount of sleep, like 4 or 5 hours. I was saying that if I could, I wouldn't sleep at all. Now with some time passes, like, there is a saying, I'm at my best when I rest. That applies to trading so much, because the amount of focus and concentration you lose if you don't sleep and properly rest and take a break is massive. And the ability to make mistakes as well.
Yeah. Isn't it also, for me at least, it's like this sometimes when I have a problem that I'm thinking about, or that's like bugging me, work related now, and when I sleep over it, then it's much easier the next day to find a solution for that. It's like the brain needs also on a subconscious level, like the time to process things and to clean up itself again. I wish kind of like I would have come to that conclusion already earlier in my life, would have spared me from a lot of troubles trading related and a lot of times where I thought like, is that really the right thing for me? Or should I just, I don't know, go and do another job?
Unfortunately, we all learn only from the mistakes, right?
Yeah.
It sounds really good to learn from, just from someone else's experience. But majority of the time, we need to make a mistake to be able to learn it and say that, okay, this
absolutely
doesn't work as human beings.
And the more costly the mistakes are, from my experience, the better for you in the long term, because most likely you're not going to repeat those mistakes. And again, if it's just a mistake that costs you, here $50, there $100, there $500, you're probably not going to learn as much from them than from mistakes that cost you like 10,000 or 15,000. Or I had like one of my worst day I ever had was where I lost $30,000 in one day. And just because I prematurely closed my options positions at the worst possible moment, although I didn't need to do that because everything was hedged, but I just couldn't tolerate anymore looking at it. So I paid a huge price to close those positions. High volatility makes option prices surge, also no matter of the direction. And I didn't want to look at it anymore. And once I did this and slept over the next morning, I thought, why did you do that? That was so illogical, so unnecessary to do. And that's a mistake I never repeated in my life. But it was a costly mistake.
I can say. I can tell.
All right, guys. I have to make a move, sadly. Sorry to leave you alone. I leave you alone, but you're not by yourself. You of course have our beautiful audience with you, and I'm very sure there are going to be some questions. Thank you guys again for having me. I'm going to be back latest on Monday, and remember really to enter our daily giveaway. 5 times 10K high stakes evaluation accounts are up for the grabs. Enter using the link below. Give us a like, subscribe to the channel, and watch every day the 5ers. And then on Thursday during the afternoon, we are going to live draw the 5 winners. Not to mention, of course, that next week, Jonathan is going to be back with his Kotbola giveaway. Or maybe it's also a nice account giveaway. More likely the second. All right. Take care, everybody. Bye-bye.
Thank you, Dirk. Have a good day. See you.
See you.
Okay, guys, I'm going to just bring the camera like this. Some reason my name is not displayed. I don't know how that should be working. No, not like this. Definitely not like this. Okay, I'm playing around with this thing. Okay, let's just bring it how it was. Anyway, I am a little bit of sick, so you guys probably can hear that. So I'm gonna do my best. But if you can hear it, that's because I'm really, really wanting to be here with all of you today, and that's why I didn't cancel my live stream. Okay, let's have a look at the NZD USD because I've seen so many questions about it, and I'm also going to cover still EUR USD from my perspective. And thank you, Vinicius. Thank you. I really, really appreciate that. Thank you. If you have any questions to me personally about the analysis, about anything, just let me know in the chat. And we have all the time to go through all of them. And again, like Dirk said, remember that the giveaway is going to be tomorrow in the second half of the day. So the giveaway is not going to happen today, but what you need to do today is you need to enter the giveaway and participate in the drawing, meaning to follow the link in the description or in the pinned comments to answer a couple of questions related to trading. And then you will be already automatically counted as a participant. And the more entries to the giveaway you do, the higher are the chances for you to win it. So make sure that you do it today, and also tomorrow be back here so we can actually give you guys more chances to also win giveaways. We have 5 accounts out of 10K high stakes evaluation, which are going to be distributed tomorrow. All 5 winners are going to be announced tomorrow in the afternoon on the live stream. So make sure that you are here as well. Let's see. Yes. Okay, so we went through the giveaway, just making sure that I didn't miss out on any comments. What's the best time frame for intraday trading with volume profile? Danish, it depends on your own preference, to be honest with you, on our personality of trading. Now, a lot of the times we as traders try to apply someone else's methods on ourselves because we see all of these flashy P&L screenshots, all this success on Instagram or YouTube channels and anywhere else, and if you feel like, okay, this is working for someone else, so I'm going to do exactly the same thing so it can work for me too. But the thing about it is that you have your own experience with money. You have your own way of analyzing the market and seeing the market from your own perspective and through the lenses of your own experience. We all have different trading personalities and a risk management as well as risk acceptance levels. So for some people, risking a lot is going to be very difficult, while for someone, risking a lot is going to be rather easy because they have a higher risk acceptance. On the other hand, some people are going to really struggle holding the trades. So meaning obviously the swing trading in this case is not an option, right? Because if you struggle to keep your trades overnight, you cannot go to peacefully sleep. If you have an open trade, then perhaps swing trading is not something that you want to be doing. However, people often fall in this trap that they see something working for others and they want to do exactly the same thing without adjusting it to their own trading personality. So the best time frame, apologies, is determined by your own backtesting, by your own trading personality type. And this you check when you start trading. Give it a try. Try to, act as a scalper for a day, for a week. try to do intraday trading for a week. Try to analyze it from the swing perspective and see what fits the most. What brings you the most peace? What brings you the most money? I know some people are not a fan of backtesting, but actually backtesting helps you also to figure out the best time frame. For me, the combination of time frames that I use is that I analyze the high time frames during the weekend mostly. So I work with daily, weekly, and 4-hour time frames during the weekend to see how the market closed compared to volumes. So related to the volume, did the market go higher? And now the majority of the volume is below, meaning and acting as a support and pushing the price up, or perhaps the opposite. And the majority of the volume is now above the price, will acting as a resistance, for example. So it depends on this plan that I do over the weekend, how I'm going to be acting intraday. And then when the week starts, the trading week, I'm applying 30-minute time frame to determining the zones that are going to be important for me to pay attention to. So for example, I know that my the direction that I'm going to be taking stock market and the indices equities this week is going to be bullish. This I figure out by using 4-hour daily and weekly over the weekend. And then during the week, I use 30-minute time frame to determine the exact zones and the moment to trade. And then 5-minute footprint to specify the specific moment to have their as perfect as I can entry point for this specific analysis. So to summarize it short term, for me, it's a combination weekly, daily, 4-hour during the weekend. And then it's 30-minute time frame during the week plus 5-minute footprint combination. But Danish, it might not work for you. So please do your back testing and you will not regret doing that, although it might sound extremely boring. This is something that can help you determine what suits your best. Okay. I do not draw the point of control in the high time frames. The indicators do it for you. So if you switch back to TradingView, right, the indicators do it for you. I use on TradingView the indicator called PVP. You can find it in the indicator window. You type PVP, it's a periodic volume profile, and then you go to settings and you select the period of time, excuse me, a different one, the period of time that you want to be using it for. So if you want to see the weekly point of control, then in the PVP, you choose week. If you want to see the monthly point of control, you choose months. If you want to be a daily, you choose day. And then you go into style and make sure that point of control is enabled. So you actually don't draw your points of control yourself, right? Indicator does the work for you and it calculates all the volume. Thanks, Void. I am going to take it as a compliment, I guess. Shall I? Should we put some music on, guys? Can you put plus in the chat if you want some background music? So welcome, Ariayo, welcome. Good to see you here. Can you guys put a plus or a yes in the chat if you want the background music? If you have enough people, I'm gonna be turning on some music for the background. So let's see. Yeah, Infinity 98, I do trade intraday, and the maximum my trades run is basically 2-3 days, which is quite rarely now in concerning Trump and geopolitical events, because sometimes you wake up with a gap of 300 ticks. And that's not what I wish to do in my trading. So normally right now, for the past couple of months, it's intraday. LJ, I think you need to get here on the live and see and show us the options. Which options do you have for the hat so we can choose? I like the pink one though. The pink one would be my favorite, I guess. I think we need to make a poll on what's the best hat that LJ has. Okay, do we have enough yes for the musics? Yeah, let's try it out. If at any moment it's gonna be too loud and you will not be able to hear me, just let me know in the chat. I'm monitoring the chat. I'm gonna make it softer.
Going long on this one.
What is this one? Okay, good enough. Should be good. Okay. Yeah, I'm going to sell for gold right now for short. Can you still hear me? Just a quick poll in the chat. Can you hear me? Like this? I think it should be still okay. So I am looking for the short opportunity for gold right now. Yes, I'm holding the short. It's not a signal, so please do your own analysis. But essentially, the reason I went short on gold is because of futures market. So if you look at the futures, you will see that the price is holding right now this massive volume which went through the 15 chart. So we are holding the same exact zone here. And on the high time frame, the 30-minute time frame, we will see that we also had this cluster volume included in the previous candle, which is right now stopping the price from going up. So if we hold the level 33, 37.8 for futures, I'm gonna keep holding short. This one here, let's make it a little bit softer with the music, perhaps, like this. Like this. Let me know in the chat if this is okay now. If this is okay, let me know in the chat, please. Let me know in the chat. And is this better now? Better. Fantastic. Fantastic. So what I was saying is if we hold 33, 37.8 level, I'm going to keep holding the short for gold because that's where the cluster volume was created. And if you're wondering what I'm talking about is I'm going to put transparent candles. And that's not what I meant to do. Right here is the cluster volume. And right now I have the setting for it at, so I don't like to use, it's 300 contracts. So in every single one of these blue dots is at least 300 or more contracts traded. So at this point, there were more than 300 contracts traded at this specific candle. And this is the reason I am going short there as well. Better, perfect. Thank you so much for the feedback in the chat. Really appreciate it. Guys, the winners of the giveaway are going to be announced tomorrow on Thursday afternoon, and all 5 winners are going to be announced immediately after at the same time. So fill in the questionnaire now, make sure that you enter the poll, and the winners are going to be announced tomorrow for Monday, Tuesday, Wednesday, and tomorrow's Thursday giveaways. And if you're wondering where is the giveaway link, it's literally in the chat or in the description to this video. Is waiting for you there, so do not miss out. Do not miss out on the chance to win the high stake account. It's not even a boot camp, it's actually the high stake account, which is really amazing. Let's see. So I saw several questions about Euro USD before Dirk went through Euro USD. Now, I saw the question about USD CHF somewhere. Let's go through the USD CHF while gold is still thinking. Now, especially put on the weekly time frame for the USD CHF because USD CHF is a very interesting point right now. Now, get ready for some fundamental impact here. Fundamental knowledge. So in 2010, the Greek debt crisis actually erupted. So the market woke up to the fact that the Greeks can no longer pretty much pay their own debt. And by August 2011, right, despite the efforts of the European Central Bank to buy back governmental bonds from at-risk countries, including Greece. The crisis got deeper, and there was even the situation when the European zone was on the edge of breaking up, and the panic was arising at that moment. Now, against this backdrop, the capital began to flee away from the euro. The investors were withdrawing the money from European currency because of the crisis, because of the risks, because the buyback of governmental bonds didn't help to solve the situation. And one of the main beneficiaries of that was the Swiss franc. So the Swiss franc at that moment was and still is free from the risks of the European Union crisis risks as well. So by that time, the USD CHF started to consolidate in between 84,100 and 1.01 levels, and it's been stuck there since 2012. So for the past almost 13 years, the franc was held within the defined a very stable range here with untouched boundaries, barely. We only came back to the same boundaries twice, right? Not counting this one. Twice in all the 13 years since 2012. And now for the first time in over a decade, the Swiss franc now dipped back into the 0.8 zone. So this is the crisis range. This is the same range where USD CHF was when the crisis in Greece was deepening. So what is going to be the likely catalyst? Well, probably the July FOMC meeting, because any information on the pulse of the rate cuts, or for example, that, you know, the decision that FOMC is going to be stating basically in July can cause the even deeper drop in USD CHF. Now, we're also talking that Trump wants to see the US dollar weakening over the period of his presidency. So we might see for the first time in 15 years USD CHF going back to the levels of 0.7, 0.721. So from the technical standpoint right now, if we go closer, we will see that we had quite a big volume accumulation over here. And in last week, I was talking about the sell on the USD the buy on the USD CHF here when we were still holding above this massive volume node. And now after the attempt to go higher, we reached the zone where I was exiting the trade and the price did drop afterwards. So now from the most fundamental perspective, macroeconomical right background, but also technical aspect, we are awaiting for the potential continuation of the downward fall. So for the USD CHF, the majority of the levels for me is right here. And if the price goes any closer to 0.81, for example, that's going to be a very good level for me to keep selling USD CHF long term. So that's one of the analysis long term that I'm looking at. If the price can get back to 0.81.1, let's say, maybe at least 0.81, I'm going to be looking for a short on USD CHF. If we look at the perspective from futures market, here, this is a 30-minute time frame. So we also can see this zone here as the majority of the volume. So if I'm going to turn on the volume from the current contract, there we go. When I turn on the volume from the previous contract, this is going to be one of the biggest volume nodes here, which I'm looking for the price to retrace to and go to the upside. If not, the other one that I'm going to be looking at is here. So that's the first option that I'm looking for, and that is the second option that I'm looking for here. So the continuation back up. So this is my analysis on the 6S. 6S is the franc futures, and they are 100% negatively correlated to the USD CHF. So if we are looking for the 6S to go higher, for the franc to gain value, for the US dollar to lose value compared to the Swiss franc, then we are looking for sells on USD CHF, right? So it would look the following way. Either I'm looking for a sell from here or from here. And that's going to be the opportunity for the first time in 15 years, guys. So that's a Swiss franc analysis from the volume perspective, but also from market. Let's see. Do we have any comments? Sadiq, I suppose you're asking about gold. My gold entry was here, so it's a little bit in the drawdown. I am assuming that it might go slightly higher back to 33.41 before going downwards, so I'm completely fine with that. As long as we stay below this zone, I'm going to keep holding the sells. And for USD CHF, I'm still waiting for the price to go slightly higher. Yeah, good. Good. Okay, so that was USD CHF. Perhaps. But for me, for current moment, gold is still bearish. Like as long as we stay below this, I'm gonna be still bearish on gold, and then let's see what's gonna evolve. If it breaks through this zone, I'm gonna be closing my trade earlier. So if you break here and the gold closes, the candle closes higher, I'm gonna be closing the trade manually. For the moment, I'm gonna be holding that. What's my take on the counter trend trades? It is, I do take the reversal trades, and I guess you can call them the counter trend trades, because I am expecting sometimes reversals. I'm gonna show you some things now. Let's have a look at that. What do we have here? Perhaps nothing at the moment. But even the USD CHF, right? Depends which time frame you're looking at. Because even from the perspective of the USD CHF, if I'm gonna zoom in right like this, and I'm gonna wait until the price goes higher, right? At this moment, it's gonna be an uptrend. So I'm gonna be waiting for the reversal, and there's gonna be the counter trend trade concerning the 5-minute, the 50-minute, 30-minute time frame. So let's say like this, that for me, very important is to be able to correctly identify the potential, because we tend to overhold the trades, hoping that the trend is going to reverse. So it needs to be like I'm trying to be honest with myself. And if I'm taking the counter trend trade and reversal trade, the first thing I'm going to be thinking about is how much potential does this thing have to go? Like, for example, if I'm going to be taking a sell here, I am going to watch out for this level, because we've been here 2 times and the price might go even like this. Well, not macroeconomically, technically shouldn't, but it can. So when the price gets here, I'm going to be looking at, okay, what am I going to do? Am I going to close the trade? Am I going to cut the partials? Am I going to move my stop loss, trail it? Because I know that the possibility is, the chances are the price might reverse. So the counter trend trades can be very profitable as long as you know that you are not expecting this specific trade to run as much as the trend continuation trades would. Let's call it this way. Totally AI generated. Totally AI. Don't trust everything you see, guys, in the current world. Hey, Lisa, good to see you from South Africa, such a beautiful country. I'm really, really looking forward to visit that. If I wouldn't be an AI, of course. Yeah, so for gold, as we can see, it's still reversing. It's still trying to reverse down, which I'm counting on, pretty much. Nice. Actually, I am looking for a sell for US oil right now. Let me open the futures chart as well. So far, what we've seen is that oil has been targeting this zone here several times. This is the weekly point of control right now, and the price had broken the previous lows. So I'm looking for this specific pattern. The price broke the highs, rejected the same level from the upside. It broke the low and now going down. So I'm looking for a short position right now for oil. Please remember it's not a signal and I might be completely wrong and lose money. So do your own analysis. Don't blame me if things go wrong. So I am looking for something like this. Have this high here. And that does look good. 1 second. And someone was asking about oil before, so the oil prices kept going down, by the way, despite the geopolitical tensions, because it's very difficult to predict if the oil is going to be, the oil base is going to be targeted, if the oil supply routes are going to be closed or not. You can analyze it to a certain degree. You cannot predict what is going to happen. Hence, oil kept dropping despite the geopolitical situation in the Middle East. And there war that erupted there recently. But and I'm still expecting prices to go lower, actually. Oil right now. The chart is going to load. I'm going to show you also futures analysis. Guys, if you keep spamming the chart, I will have no other option, although I really don't want to do this, but to put you in a timeout. We answered this question multiple times, and asking this question one time, if you just joined, is more than enough. Please do not spam the chat. The winners are going to be announced tomorrow. All 5 winners from all 5 giveaways, so Monday, Tuesday, Wednesday, and Thursday. 5 people who are going to get 10K high stakes account is going to be announced tomorrow afternoon. There we go. We bring up the second chart. First of all, it depends which account you trade, because there are different rules for the bootcamp, for example, or for the hike stakes. So you do need, it depends on which account you trade. If you trade with the 5ers, I trade both with the 5ers. I trade also futures on my personal account. So I am allowed to do whatever I want. Even lose all the money. So what we see here for oil is that pretty much we had, pretty much had the majority of the volume above. I am selling right now. My first target is going to be 64.37, and the second one is going to be 63.40. So 2 zones here I'm going to be looking at for the reversal of oil prices. But that's futures. So on the CFDs, I have to adjust the level. So when I trade these 5ers, I use similar entry points, different price levels because of that. So yeah, so that's the first level is going to be 64.37. Bring it to chart 64.37. And the next one is going to be 63.40. That might turn out as a very good trade if it goes lower. Let's see, hopefully. My gold is in a drawdown right now, so don't listen. Yes, you are completely right. The more entries to the giveaway you make, the more times you answer the question, the higher are your chances of winning, of course. Okay, so do we have any other questions? This is a question that you need to answer when you're a little later in your journey, because I don't know what's your opinion of other traders about that, but I've never seen a trader who has the same percentage of the drawdown monthly and who has the same amount of profits every single month. It's not sustainable, and it depends from month to month. It depends from week to week. It depends from year to year, because some years, some months, some weeks are going to bring you lots of opportunities to make profits, and some weeks are going to give you nothing or a loss. So that's the question, I think, is formed slightly correctly. Okay. US 30. US 30. I was looking at NASDAQ earlier today, and I'm looking for the continuation to the upside. Yesterday we were talking about this specific level 22,250, from which I was looking for a buy, and this is exactly what happened. So keep holding this one, and also looking to enter another one and double up on my running position when the price breaks outside of this range, gets outside, and then continues up. So if the price breaks outside of this range and holds here, so the candles are going to be closed here, so let's say 15 or 30 minute candle, then I'm going to wait for some confirmation, maybe small consolidation or some pullback, and then enter the trade and continue higher. And I have similar analysis on S&P 500 as we discussed earlier. So also yesterday, just yesterday stream, you can go check it back out. We were talking about this level here and the longs. So keep holding this one. If the price breaks through this and this consolidation, also going to be doubling up on this one. And concerning the US 30, that's interesting because I didn't have a look at that. So we can do this together with all of you. US 30 also had a really good entry here yesterday. So we had this zone being broken. Oh, such a clean entry. We had this volume accumulation zone being broken. The price went higher, retested. This is such a clean entry. If not NASDAQ and S&P 500, I would take this one as well, but that's too much. I try to not trade too many equities at the same. For that, I told you that I'm a little bit sick, and I hope you know that I'm doing my best being with you here on the stream today. So I'm looking for, well, I would be looking for this buy yesterday here, which I didn't because I was at NASDAQ and S&P 500. And I'd say for the continuation to the upside as well. However, I don't have the entry for myself. So I don't see the entry possibility yet for the US 30. My bias is bullish, definitely bullish. However, for the entry point, I'd probably wait until the price. I don't think the price is going to go all the way down. If it does, then from here, and if it doesn't, then I'd wait until the price breaks this range, closes higher, and then wait for some confirmation here from the footprint, the price action, and then go longer there. I do like S&P 500 and NASDAQ right now more, whether it's this entry yesterday was better on Dow Jones. The volume profile on TradingView has different indicators, TradingView has different indicators for the volume profile. I use specifically on TradingView PVP. It's periodic volume profile, which you can adjust to the specific period of time. So you can select, for example, to reflect the volume profile of a week, of a day, of an hour, of a minute, if you are a scalper, for example, or like monthly if you're a swing trader. And I use VRVP. It is pinned on the right side of my screen, and it shows the volume distribution throughout all the visible range of your chart. So it's all the candles that you have reflected on the chart. It shows how the volume was distributed over them. And the other one is called the fixed range volume profile on the left side of your screen. And this is a drawing tool which I was using right here in front of your eyes a second ago. So there are different ways of using it depending on which effect you want to see. Boyd, good to see you. Cheers and have a great trading day. Last week you called the top for USD JPY at 148. Yes, I did, and USD JPY was hilarious because that was like tick to tick actually entry and the trade. So last week we were talking about this. So for those of you who've been here last week, that was a tick to tick exit and entry for the short. Probably the best trade actually for the month, to be honest with you. USD JPY is so beautiful. It's crazy. Sometimes you have these things, that like you just normally I wouldn't even look at it if you guys wouldn't ask. So thank you so much. Now regarding the USD JPY, I am more bearish, biased for USD JPY still. So if we look at the higher time frame, for example, we see that USD JPY is really struggling to break 147, 148 level. We had it here, non-accumulation, still failed to break up and drop down. So just out of the pure price action perspective, even, you see how the buyers were trying to push the price up. We had several clean support and bullish candles, which it afterwards failed and dropped through 148. We had another try and now another try, and look how the previous daily candles ended. We had a huge week to the upside. Usually such a huge week to the upside shows the liquidity grab. So we have lots of seller liquidity, sell limit orders standing here, which are not allowing the price to go higher. That's just my guess out of the price action movement. And I am definitely bearish on this, with an exception that I don't like this zone here of volume, because that's where the price is rejected now. Yesterday we talked about the USD JPY, and I was saying that I'm looking for the short about 145.750 level, and that's still my opinion. So I would still be looking for something like this to happen. And eventually, if the price breaks this zone here, I'm going to be adding up to my position for short. So I'm bearish on USD price. So I had two scenarios: either the price goes higher and I'm going to take a short here, or the price breaks this zone, holds lower, and then I'm going to enter in short on the break and retest, which didn't happen. So the second scenario didn't even get executed. And the first one is still in the process. I'm looking for this now. Looking for this zone to hold USD JPY. You're very, very welcome. By the way, guys, 500 of you are watching us on Twitter. Please make me a favor and go on the YouTube, put the like button on the stream. It's a very small action for you, but it's a very big deal for us and for me personally, because the more likes you put, the more algorithms suggest us to other people, and of course, more people are going to be joining lives. So if you can go and put the link, put the like button on our stream, it would mean really the world to us as the The5ers. So if you're getting any value, please do this right now. Go follow our YouTube channel. And by the way, also because we have 75,000 subscribers, we have a huge giveaway happening next week. Also on YouTube, by the way. So you need to go to YouTube anyway. You have the giveaway link in the description. For this week, we have 5 accounts been given away on Thursday, so it's literally tomorrow. The giveaway link is on YouTube. Next week, huge giveaway is going to be on YouTube. So make sure that you are on YouTube watching us, okay? And again, if you're getting any value, would really be grateful if you can go and hit the like on the YouTube video. Okay, let's see. I would choose S&P 500. I'm going to explain you why, because Russell is the value type of equities that are included in that. S&P 500 has 500 companies, which also include some of the companies from the NASDAQ index, and that makes them highly correlated. Russell has the different type of companies included in the index. So 2,000 companies which are included in Russell are the value type of value, which are not similar as a big high tech, for example, which is NASDAQ in this case. So between highly correlated index to NASDAQ, I would choose S&P and Russell as a side. Guys, if you will be spamming, I'm going to be putting you in the timeout. I appreciate every single one of you. But like if you spam, it's not nice. You know, also this is not nice. Like you're in a timeout and you can come back a little later when you go. You're very welcome. Yes, I do. Gold we discussed. I'm in right now in a short for gold, which is slightly in the drawdown, but still rejecting my level that I'm looking at. So as long as we hold this zone, I'm going to be keeping short, which looks quite nice right now. If the price breaks this zone and breaks this highs and closes, the candle closes above 33.44, I'm going to be closing manually my trade. Right now, we see perfect rejection from the point of control of the day and this high volume node here. And oil is going down. It's going down. It's diving, baby. That's what we want to see. This is we talked about this just how many? 15 minutes ago. Алла, дуже дякую. Дуже дякую. USD CAD. Let's have a look at USD CAD. That was my trade from USD CAD earlier this week, which went to barely second target. Did hit my break even after all. For the USD CAD, I wouldn't, probably not gonna look for any trades, to be honest with you today. The USD CAD personally. Yeah, not really now. I don't like the react. I'm still bearish on USD CAD, but if you look at the price action this week to the downside isn't exactly what I prefer to see. If it wouldn't be a week but the candle, I would be looking for a short already right now. This week makes me rather uncomfortable to go short at the very current level. If we look at the 1 hour time frame, we are also above the weekly point of control. So for me, for the new entry, I would be looking for USD CAD for a short would be only if we break the point of control of the week and also the developing point of control of the week. So this whole volume zone here, if we break through this, then I would be looking for a short. Rather than that, I would probably stay away from the USD CAD for the current moment. But I'm still aiming and seeing USD CAD going back to 36.6 level. So if it breaks and closes below 37,200, then yeah, I can go short at this one. So you know what I'm gonna do, guys? I'm gonna put the alert because I know exactly how it ends. I don't put an alert. I don't have a trade. So Gold is yeah, coming back, and oil is doing great. That's a volume profile. I do not trade order blocks. That's Victor. Victor is, I think, going to be here later on, so you can ask him about order blocks. Fabian, we already checked UJ before. Yeah, just 10 minutes ago, actually. So if you scroll the stream back just 10 minutes, it's going to be there. I think someone is going to be joining us in like about 5 minutes from now. So we have another 5 minutes to answer all the questions that you have. If you got any questions, please let me know right now. Yeah, might not be the bad idea. Might not be the bad idea. I mean, in the current situation, world, you should be very, very picky with your trades. Very picky. GU. Let's have a look at that. Are you asking about the NZUSD? I would normally go short. So short explanation about volume and NZUSD at the same time. Sketch two birds at once. I trade from big volume to big volume area. So this is a high volume node here, and that's a high volume node here. So by default, I would be trading from this level to this level, and then to the next volume levels below it, if there would be. And normally by NZUSD, I would also be trading their sell right now for short, but I don't like how the price went here and failed to go lower. For NZUSD, as the current moment is looking like a short for me, but it's too risky because I do see the rejection back from the same zones higher. So for NZUSD, I am going to be skipping this, and GU, she got massive amount of questions about. Also skip day for me for GU because yesterday the price surged massively. And on the stream yesterday already I was mentioning I'm extremely uncomfortable taking trades when the price went without any pullback in one of the directions. So if right now we went without any pullback back to the upside, we need to realize that lots of money, people made lots of money, people lost lots of money, and their chances are the price is going to either consolidate there for a while until more money and fresh blood enters the market, or it's eventually going to finally start the pullback back to the downside. So normally this would be a counter trend trade. The question was about it earlier. So this kind of counter trend trades I don't take. Yeah, if the price would go in like this, then I would be able to take this trade here. When the price surges like this to the upside, the chances are there is still momentum, but chances are also it's going to start the pullback, or it's going to be that until the new fresh blood enters the market again. So for me, GU is bullish, and yet I do not see any good entry for that. Yeah, GT, I talk a lot about volume on the live streams. I'm going to be here tomorrow also for the first 2 hours of the live stream. So that's 10:30 to 12:30 Central European time. So feel free to join. Feel free to ask questions tomorrow. Maybe we have more time also, and I'm going to be able to go more in depth with explanation on the volumes. Now today is already I'm going to be jumping off the stream anytime someone else is joining us, because as you can hear, my voice is not really good today. I'm getting a little bit sick. But tomorrow I'm going to be back first 2 hours of the live stream once again. And if you have any other questions, I'm going to be very, very happy to explain more about volume, about footprint, and dive a little bit more in depth with that. I also do not use moving average, guys. Also don't understand the moving average. Don't trade a moving average. I used to trade it before, and I don't trade it right now. People use it. People trade it in different ways. Some trade crosses. Some use it as a support resistance. Some trade breakthroughs of that. There are different ways how you can approach that. Right, there they are. There they are. Long time no seen. Look at them. And they are not in a rush at all to join the live stream. LJ in the background just peacefully drinking his coffee. Where is the head though? Exactly. Yeah. Yeah. I know. Can you come on the live stream without the head, LJ? It's not at this point. I don't even think it's acceptable. Yes, so please do ask tomorrow. I'm going to be very, very happy to explain more. And I indeed going to take an advice and go get some tea. So tomorrow I can still join Mike. Otherwise, Mike is going to be alone tomorrow streaming if I'm going to lose my voice at home. That sounded like a threat almost. If you win a giveaway, you will be announced tomorrow in the afternoon of a live stream. So make sure that you are here tomorrow. And once again, if you're filling the questionnaire every single day of the week, you have more chances to win the giveaway. So make sure that you are here tomorrow. Tomorrow is going to be the new link in the description of the video and the pinned comments. And you will be able to answer more questions and get another entry to the giveaway one more time. Are they joining? Am I bringing them by force to the live stream, or?
We're waiting for you to tell us when you're ready to go, and we'll do our intro. We're trying to, do this professionally here,
Mike, I was ready to go like an hour ago.
Your poor voice. I hope you're going to go rest and drink some tea. Otherwise, I'm going to lose my voice tomorrow.
I will. Okay, guys, thank you so much for being here today. I appreciate every single one of you joining, and I'll see you tomorrow, hopefully for the first 2 hours with Mike. And I'm leaving you in the best hands possible of Mike and LJ. I'm going to bring lots of value to the stream as well. Thank you, guys. See you soon.
Hello.
Who is up for that intro? Always a pleasure seeing an Anastasiia. It's an Anastasiia marathon this week, guys. You have been in for quite the treat having her every single day this week. I feel like we didn't really need to do a giveaway because you guys got Anastasiia every day. So that was almost better than a giveaway, I would say, So thank you, Anastasiia, for the lovely handover, as slick as ever. Team ABL are in the house. That is right, Fabian. We are here for the next hour and a half or so to take you through the next segment of the live trading room. How's everyone doing? Hope everyone is well. Hope everyone is enjoying the madness of the markets as always. Tell us what you guys been looking at. I haven't had time to look at the stream today to keep up to speed with what Anastasiia was talking about, but I do want to point out, LJ, I said that the dollar was going to be showing some bullish momentum, and look what happened.
Fair. I mean, we have seen a little bit, but we were looking for that pullback,
Grant,
right?
let me be clear. I wasn't saying that we were going to suddenly go on like a bullish run of like all-time highs or anything. Let's just caveat that context, right?
Sure.
But I did think that we were going to go higher on certainly on USD JPY, head on lower on Euro USD. Euro USD hasn't really done it. Euro USD has kind of just sat in that rangy area that we were talking about. And pound USD has done basically the same thing as well. So yeah, neither of those two are particularly ready. USD JPY, which we were looking at, has actually shown a bit of momentum, just basically trying to make up for this huge dip that we had here over the last kind of 24 hours or so. So plenty going on, plenty for us to go and look at. Elu Forex is looking at GU, GJ, EU. That's well, apart from GJ, that's pretty much what we just looked at. So 2 out of 3 ain't bad. 2 out of 3 ain't bad, right? So yeah, but guys, first things first, let's get the obvious elephant in the room out of the way. There is another giveaway today. There is a link in the description. There is a link in the chat, pinned to the chat. All you got to do, click the link, answer the question. The answer to the question is a multiple choice, and that is the secret code to unlock more opportunities for you to enter even more chances to win yourself one of the 10K high stakes evaluation accounts. Now, all of the draws for all of these are going to take place tomorrow afternoon after 12 p.m. UK time. So there will be 5 accounts all up for grabs. And the best thing is if you are only just joining us now, okay, granted, we're a little bit disappointed. But if you missed yesterday's stream, if you missed Monday's stream, we are still giving you the chance to enter into that chance to win a 10K high stakes evaluation account. So go check out the live stream for Monday, go check out the live stream from yesterday, and you can go and click the link on there and you can actually get your entries in for those draws as well. So plenty of opportunities for you guys to get involved, to get entries into this giveaway. Frankly, if you're not doing it, I don't know what you're doing. But yeah, go check it out. And yeah, if you're struggling, let us know. But everything is working. We've had literally hundreds of people all jumping into this. And the other elephant in the room is, I mean, I'm a little bit disappointed it didn't happen with us, LJ, to be fair.
I know.
I was kind of hoping to have that little, feather in the cap to say it was you and I that got us over the line.
Yes, I could have put one in one of my hats then, but
exactly. But alas, it was not meant to be. But we did hit the almighty 75,000 subscribers whilst Dirk and Anastasiia was online, which can only mean one thing. It means that Jonathan has to get his thinking cap on and to figure out what he is going to do as a celebration for this. So yeah, keep an eye out for that when Jonathan's back next week. There will be no doubt news about what the giveaway or what the competition or what the celebrations are going to look like for that. It's not going to be Jonathan in a clown suit, just in case anybody's wondering. I know there's still a little thing about, clown costumes and everything else, but I think to hit 75,000, it's quite the opposite. I think it should be a king costume for Jonathan joining, having hit 75,000 subscribers. Alu FX is asking, could we are referrals as additional entries for the giveaway? Just thinking. Alu, that is a possibility in the platform that we use, which is Gleam. However, it is not available on this giveaway. Maybe in the future we might consider it, but right now on this giveaway, the entries are you subscribe to the YouTube, you subscribe to the Instagram and something else, and you subscribe. You don't subscribe, but you save the calendar invite. See, we were very clever here. We gave you a calendar invite for the next day's live stream. So you can save it in your calendar and you can have a nice reminder to say, oh, the 5ers live stream is on. Go check it out.
There we are.
I mean, what more could you possibly want? It's as if we made it that way. It's as if it was planned that way.
Well, that's how
So,
you get all your entries for the week, right? So you gotta
exactly.
come back.
So you know, we
more
could not
entries
make
means
it
you get
easier
more
for you.
options, more chances, everything.
Exactly.
So there you go.
Exactly. So we could not make it any easier for you. The closing deadline for entries will be midday tomorrow UK time. So just be aware, all of the entry forms, all of the links, they are all going to stop accepting entries at midday UK time tomorrow. Okay. Anastasiia, just a big thank you again for alerting me about the DX1 platform on TradingView. Much appreciated. No problem, DJ. I'm not sure if Anastasiia is still watching or not, because I know she had a ton of work to do as well as trying to rest her voice. So not sure how that's going to work for her, but we will see. And seeing as some of you are asking so nicely, Jonathan, Barnadus, all asking for gold. Yes, we can look at gold. It's not a problem.
Indeed, we can do.
We can have a look at gold. Gold has kind of basically entered this kind of rangy period so far this morning. Broke out of this previous structure and of this one, and created some higher highs, but it's now dropped back down. Now, the only thing is that by dropping back down, I'll just delete this zone because it's not been respected, is done this little kind of wick here on the 15-minute. Now, this area here was a 1 minute candle that opened at 1 o'clock this morning, my time, so midnight UK time, without a wick. So you can see that there. Hang on a second. That was wickless earlier. It's no longer wickless. I stand corrected. Sorry, guys. I shall just be getting back in my box, I think, because that was, unless it was on a different time frame. No, 2 hour. No, 3 hour. Oh no. My apologies, it's an inside bar. It looks wickless, but it's not in fact wickless, but it is an inside bar. So therefore, for me, it is high value liquidity. But I think we're not going to get more sellers coming in until we get up to this area here. That's my personal view. I think we're still kind of looking to try and capture more of these major levels of liquidity up here. If we look at the 5 minute time frame, we can see that here we have a wickless candle. Here we've got an inside bar. Here we have another wickless candle. There's lots and lots of major liquidity all up here. And I think, if I'm not mistaken, we've even got a perfect double top. Yeah, perfect double top there as well. So there is a long old trail of liquidity left behind. So what would we be looking for right now? I would probably be looking for buys in and around this zone here. Wait and see what the reaction is in there on the 1 minute. In there on the 1 minute, we have this nice wick. So I'd like to see us come down and retest that. If we can respect that wick, then I'd be looking for longs. What would the longs look like? Well, I mean, theoretically, you could hold them for quite a while, but I would be looking for longs into, where is it? Into this area here, in fact, because I think we could go all that way today, potentially, because we haven't really done much of a move today. So that would be one move. The alternative is taking us lower. Now, taking us lower is also a possibility. If we have a look on the 1 minute where we got possible reactions, well, we've got a really small one in here. We've got one in there. We also have a nice little inside bar there. So possibly also down here after we take that 1 hour inside bar. So there's a few levels there to look for possible entries. So retesting the wick, that's one. This would be another one down here, and this would be another one testing down here. Obviously still all testing, all looking for the same take profit area, but obviously each one increases our risk to reward, and so starting with a 22, 32, 37. So we'll see, who knows, but that is my current bias on gold. LJ, what are you looking at?
Yeah, as far as gold, I'd say pretty similar. I'm hesitant to get long from where we are personally. I would prefer to short from, say, around where your profit target is, sort of just below 33.50, so about 33.45 to 47. So I think we're looking at pretty similar area as per your target, per my short area, right? That's kind of how that plays out. So I think that's definitely quite good. As far as gold intraday at the minute, I just don't really like where we are, just how the kind of intraday price action has sort of gone. I wouldn't be shorting here just yet, is sort of what I would say. So therefore, as far as a potential rest of the day, rest of the session, there might be an option for some longs, just like you outlined. So and then on the downside, it'd be looking somewhere around 32.50. So if I was looking at, say, like a swing trade, I look somewhere about 33.50 with a stop about 33.80, right? And then 32.50 kind of downside. So you got a $30 stop with about $100 worth downside as far as a swing trade. Just with the current structure of gold lately, I am starting to lean slightly more towards swings somewhat. I feel like the intraday structure and sort of trading activity has got a little bit messy, a little bit janky. Some days we've got some clear days, like we've had that big tumble. So if you're going purely off price action and technicals, then you would have caught that up. But obviously we've had all the other drama going on at the same time, which makes it very difficult to pull the trigger on that, because the other things are sitting in the wind, and it's whether you take the shot on it. So those would kind of be my points for gold at the minute, I would say.
Just a couple of points in the chat. So Adrian, there is a draw. There is a opportunity to enter a draw every day. The draws themselves are taking place tomorrow afternoon after 12 o'clock UK time, so midday UK. After then, that is when the draws for all 5 high stakes accounts that we're giving away will be made. Monday, Tuesday, Wednesday, each of those draws has got 1 account as a giveaway. Tomorrow is a double whammy, and there will be 2 accounts for all the entries that come in tomorrow. And the question is on the form, Oliver. Go to the form, log in, and you will see the question right there. The question will tell you what the secret code is to get your entry. And allô, it's not good. The gold 4 stop losses. I don't know if you are French. I apologize if you're not. It looks it looks like a French name, doesn't it? Allure Forex. So maybe it isn't, and if it's not, then I apologize. Fabian LJ is asking, what's the number of monitors? Let's see. Who do we think's got more monitors, me or LJ? I'm curious.
I definitely have a couple. We'll say that.
LJ likes them wide. LJ likes his wide monitors.
Yeah, like I'm thick. There you go.
LJ likes his wide monitors.
The 1-2. So this is laptop with the screen hooked up here. I've got 4 other screens sort of in front of me with my desktop PC, like my main PC. So that's simply what I'm running. I did have 1 extra one up the top, but it sort of burnt out. It was an older one that I had, so I gotta replace that guy. But yeah, 7 is normally what I'm running total.
6 or 7. If you include my phone, mine is 6. I have 5 actual monitors. I did admittedly purchase another one yesterday, which is a portable one of those ones that you can just plug in on a USB-C cable for my laptop, because I'm using a desktop PC and I just can't get, if I have to stay at home for some reason, I need to be able to work from home. So hence my justification, and I can deduct it on tax. So, you know, it's all good. But yeah, I am working on five monitors plus the mobile phone, if you can include that one as well. So there you go. I just want to make sure. I'm just going to give me a second, guys, because I can see there's loads and loads of requests for different assets. So please bear with us, guys. I'm noting them all, and we will go through them. Okay. So I can see you asking for silver. I can see you asking for EU. I can see you asking for New Zealand Aussie. New Zealand USD. So can see all of those guys. So we will answer those questions very, very shortly. However, TechTide and I think somebody else, Kamal, asking how to get. Well, you can't get an account. You enter a prize draw. So we're doing a giveaway all this week, every day this week. There is a link in the description. There is a link pinned to the chat. Click the link, answer the question. The answer to the question is the secret code that you're looking for, Kamal. So get the answer to the question, and then you have a bunch of other opportunities to also enter for that prize draw. All of the draws are going to take place tomorrow after 12 o'clock UK time. Okay, so tomorrow we will be giving away those 5 10K high stakes evaluation accounts live on stream. He's from Uganda. Okay, my apologies, Alu, but is it? I'm assuming it's French, right?
There's a lot of French spoken in Africa, though, right?
Yeah, exactly.
Right?
So I'm
or at least
exactly. See, Henry's just trying to get me to read out words now. Henry just wants me to go sacre bleu.
Well, Henry speaks French, right?
That's all Henry's trying to get out of me.
Yeah.
So yeah. The question, Dubacor, the question is in the form. I can't give you guys all the answers. Click the link on the chat in the description, and you will find all you need to know over on that link.
So it should be tagged at the top of the chat. It should be tagged there. You should find the link there. Yes. Go through that. You should be able to
it is either. Yeah, is that right? Am I pointing in the right direction?
It should be there. Yeah.
It's either there or it's down there in the description.
In the description, right? Yeah.
So there you go, guys. It couldn't be easier. You log in, answer the question, and you have a bunch of opportunities to claim your entries. And you can still enter for the live streams from yesterday and on Monday as well. So, I mean, we couldn't make this more easy for you if we tried. Amal saying you look incomplete without your hats, LJ. And I saw somebody else saying that you have more monitors than hats. This can't be right. The hats are a thing. The hats are a thing.
I got a whole bunch. We got some more here. Yeah.
Do you know what? I feel as though we need to go and get some ABL hats. You know, and
we could actually.
Because I saw the guys on Top Step have got hats, but maybe we need to do something different. Maybe we need to get like the hat that you just had there. We need to get rather than baseball caps, we need to get like beanies or something. You know.
Yeah, something stylized in like a cool way.
Exactly. Anyone can do baseball caps. We need to do something different, So yeah. And Jonathan, do I have to be online to see if I have won, or will you send an email? I'm pretty sure we will be sending an email to all the winners, so you don't need to worry about that, because we know that for some of you it might be the middle of the night. So yeah, exactly, Cam. Full merch branding is on its way eventually at some point when I get round to it, because I've got lots of other things to do. So yeah. Alu, do you kind of at some point change strategy when it sort of consistently fails on your few pairs? Does it mean seasonality or something? I go hats and masks as well. We're not going to do ABL masks. The masks is Victor's and Victor's alone. We can't be touching the mask. I'm sorry. That's just not going to be.
He needs to come in with a Batman mask sometime.
Yeah, exactly.
We should do something for October for Halloween, right? Where everyone just dresses up. Mike's Derek, don't make me do this. I don't want to do this.
Derek, literally at the top of the chat, there is a pinned message. Right, there is a pinned message that says today's giveaway link It is also in the description. Okay,
Yeah.
it is there. All right, and I am only the CEO of. I'm not sure what I'm the CEO of exactly. I do have my own little side projects, so maybe I'm the CEO of those. But I am the CEO of my life. That is all. And even then, I'm not the chairman because that's my wife and kids.
He's talking about ABL. You're the lead.
I'm the project lead. I am
Yeah.
the guy that is trying to push it forward. Fabian, I know that LJ's dabbled in this, haven't you, LJ?
A little bit, yeah. It's I don't like it long term. Is what I would say. I would say it's better to develop your own trading strategy and then try and amalgamate automated portions off that. The trouble is you'll find that whenever you automate stuff, it'll be really good for a certain period, and then it will just capitulate itself and just flop. And so then the thing is, you often then have to go in and iterate and retest and constantly keep up with that. And at some point you go, I might as well just be either trading this myself or, right? Because then you actually have that added control. Because even then, as you iterate and keep the model updated, it's still up in the air to see whether it's going to work. Yeah, and the fourth thing is going to be that at some point, I mean, you've got so much AI and stuff going on that you yourself will be able to build better and better stuff. But also that means the other participants modeling things out will also. So the arbitrage starts to get quashed, if that makes sense. So it depends on what levels of complexity we're talking about. Because if you want to build out really complex models that take, you're going to have to go get whole excess servers and a whole bunch of processing power to actually do this properly. Then that's another question versus just like a sort of bot type thing that you run on like an MT5 terminal.
Exactly.
That typically doesn't have enough variations to react to market change.
Yeah. And the thing is with these bots, the bots don't. The one thing that none of these bots have is that none of them have discretion. They are rules based, right? Yeah. So they cannot take, they cannot take into account market volatility with news or sudden events or any of these sorts of things. So there is always, even a bot isn't going to get you 100% win rate or anything like that. Rupam, we will come to gold in a minute, but I just want to make sure I've captured everyone. Stephen, go to the description from Monday's live stream and you will find the link in the description. It is right there, I promise, because I put it there myself. So yeah, Claudio wants a wooden mug. I'm not sure why you want a wooden ABL mug, Claudio, but I'll take it on board. And Manlio Le Monaco, we appreciate that you find our talks interesting, and I'm sorry that I'm not blonde enough for you. LJ's probably a little bit more blonde than I am. I'm more grey than blonde, but you can't have Anastasiia all the time. I'm sorry. She just, she spreads her love and joy and interest in the markets, not just here, but in many other things. She has her own Telegram group where she shares loads of insights as well, so you can check that out. Link is in the description. But she will be back tomorrow with me tomorrow morning from 9:30 a.m. UK time for the first 3 hours, because she said she was going to join us for the podcast tomorrow. So
is she actually staying, or is this going to be
well, she said that's what she said to last week on live stream. So okay. I need to remind her today actually that that's what she promised. So we'll see. But yeah, so she will be back with us tomorrow. So you can catch her then. We've got Ash saying gold is likely to go down from here. Maybe not. What else have we got happening? Can someone help replace the link? Derek, the link is in the description. It is either here, there, in the chat, right? Or it is in the description down there. Not on LJ's head, but further down in the description. All right? It is there. I promise. Okay? The number of entries per live stream is limited to 5. That is correct. Makoyonaz NASDAQ. Because it's original and avoids the use of plastics and metals, but it has to be 1 liter to be able to drink beer as well. You're not asking for much there, Claudio. Claudio's like, do you know? You can imagine Claudio be one of those people that he goes into a pub and he'd be going, no, that beer is too frothy. No. Go clean your lines and get me a new glass of beer. You know, he'd be the guy that would kind of be checking the levels on a Guinness. You know, that sort of thing. He's like, no, he didn't do that right.
Hey, I mean, fair. Give me the full beer, like. I asked for a pint and you gave me a schooner, basically. No, I want the pint. But no, I like Claudio's style. Yeah, good 1 liter. Yeah. That's
exactly right. Let's get back to the actual markets then, and let's have a look at NZD USD. Was showing quite a lot of volatility most recently. It's if you look at it on the 4 hour, it is still within this wider range, right? It hasn't done a huge amount, right? It broke these highs here and it started to gain momentum, but now it's stalled again. I mean, if we do a trend line across it like that, we can see that we're now retesting that trend line that was broken. I don't know. What are your thoughts, LJ? I mean, they're closer to you geographically. I know it's a bittersweet relationship that you have with them. But what's your thoughts on your Kiwi neighbors?
Yeah, so New Zealand dollars are pretty similar to Aussie dollar at the minute. You know, same basket. They often trade fairly hand in hand most of the time, at least, because generally the sort of macro governmental picture, etc., is pretty similar. We did have a slight dislocation when New Zealand had house prices really coming off. That's all settled now. That was the past sort of couple of years, and it's sort of recovered as they had a bunch of people leaving the country. So net people leaving over coming in, that tanked house prices, that created a bit of disruption, but now they're back sort of in sync. So similar to Aussie dollar, I think we are going higher. That's just the first point. I will say I was looking at Aussie dollar as well earlier. I'm not super enthused with the current levels as far as the spot levels where we are. I would like to see a slight pullback. Similarly with New Zealand dollar, say somewhere around just tapping into 59 again, 59.90, 59.80, somewhere in there. However, given the construction and how we've held up after this very strong rebound back into the 60 level for New Zealand dollar specifically, I think we might just end up running from here right up to 61. So we're kind of looking at a similar basket for the euro dollar, pound dollar as well. We seem to have found kind of a bit of structure, bit of support, bit of base, bit of consolidation up here. And it looks as though the dip is going to be very shallow and we might have already had it. And so my base case would be to see New Zealand dollar from here at about 60.20 right up to 61 again and try and test that number. I don't think we'll get much further back into the 59s at all. I think we might have had that move where we stalled just above 60 cents on New Zealand dollar. So I would even consider, to be fair, entering somewhere here with obviously a stop, below that 60 cents and then look for 61 at the minute. So that's kind of what I'm seeing both there and on Aussie dollar. Similar story as well. So that's what I've been running with.
There you go.
Surprised I haven't actually shared my screen here.
So I know. I was.
Yeah, no, I didn't. I thought I put it up before. That's my bad.
I was looking longingly at the others. Let's go have a look at silver, shall we? Silver isn't one that LJ nor I particularly are a fan of. Not because there's anything wrong with silver. My mum is a big fan of silver jewelry, but it's just incredibly wicky. And if you're trading it on the 5ers as well, those wicks can be really nasty. Like, they give great spreads, but they can't give great spreads on every asset under the sun. right?
Yeah, and
so
and also when you give great spreads, like you're going to get worse rollover because you're getting real markets, not a like a broker market that's setting their own parameters. More retail side. I mean, so you do have to consider that as well.
The move itself that it's on at the moment on the daily, we had this big drop at the end of March, beginning of April, right? And then we've come back up, we've come back down to the 61.80, and we've pushed on higher, and we've reached the 127.20, and we're slowly pulling back down. I mean, the next fib that I would probably be looked to drawing on that would be somewhere starting maybe here up to here, because that was essentially the impulsive move that broke this high. So that would be potentially a kind of a new fib to draw. Having said that, when we take it down to, for example, the 8 hour, it's just kind of a bit barcodey. There's nothing really clear. Like there's no big significant candles one way or the other. I mean, you've got this one here on the 8 hour, and you have these ones all pushing down. So, I mean, it looks as though it is in a similar vein to gold in terms of an overall bias of sells, I would say. But I don't like where it is at the moment. Experience has taught me that if you try and catch silver on its move whilst it's moving, you're gonna get hurt.
I think the key takeaway would be it's pretty clear to see we've got lower highs and lower lows there, continually coming in, right? So I think the next point to move back to would be somewhere around 34.50. That would be kind of what I'd be looking at from here, but I would very much be leaning on sells from any kind of retracement rallies, just like we had just earlier. And I would keep sort of rolling into that at the minute. I don't really see any fair reason for further upside from silver, at least given at this stage. And plus, you have that leading input as well from gold. I think we've touched on a number of times. They've kind of dislocated a little bit of that correlation in recent times, which is part of the reason I don't like it so much. Silver tends to wander off and kind of go off into the forest by itself and do whatever it feels like, right? But if you consider that we've ran up from 33 up to 37, that is a reasonable move, and that's only since June, right? That's 10% odd, right? So fair to see a bit of a pullback. It looks as though that's what we're establishing, and I would be pitching somewhere around 34.50 to 70 as the lower end target for that. So then the question just being whether you want to trade it intraday or multi-day swing trade.
Yeah, exactly. So I mean, where we are right now, I mean, the next fib, the other one that you could do to try, because that helps us get a bias, let's say. The other one that you can maybe do is maybe take a look at, well, I mean, you could do that one there. I don't really like the look of it, to be honest. Realistically, it's probably from here that broke the previous low. Again, I'm not a big fan of it. I mean, I wouldn't be getting in. I'd be wanting to see some kind of retest. So personally, I would stay away from silver right now. Wait for it to come back to a key level. Euro USD and pound USD, please. Let's have a look at the Dixie then first. Dixie slowly, very, very slowly is climbing up. As we can see, it's been doing that as we thought it would. It's been slowly climbing up, and theoretically could be coming for this gap over here. Whether it does or not remains to be seen, but it is ever so slowly edging up, right? Which is what we can see on USD JPY, although that has now reached a key area and has somewhat stalled on the 15-minute. Euro USD, therefore, Euro USD again seeing a bit of a pullback up, some weakness back into the dollar, but wider, just in the middle of a range. I mean, I don't like it. I don't like it at all at the moment.
I do like it, actually. I think we're staging that, that run up.
You think?
Gradually now, yeah. I liked the reaction that we had, just that slight tap through 116, and then pretty swiftly we started getting bid up. Obviously, you're going to expect a slight pause / pullback just on a 1 to 5 minute time frame. We did that, came back into that range, created a higher low, however, and then have kept going. So that's definitely the kind of trading activity I was looking for us to then continue on and potentially run up towards 116.50 as the interim point, and then beyond that, it's about 116.80, and then your 117 plus. So intraday, I mean, we definitely have quietened down a little bit. So I got to
say, I'm not liking longs. I'm not the way not the way it's set up. Sorry to interrupt. I just the way that it is. You've got 1, 2, 3 5-minute candles, all with major liquidity left at the bottom. So no wick, and this one is a perfect equal bottom. I don't think you're going to get a move yet until at the least, I think I want to see some kind of rejection of maybe this area here, right? So it tried to push down and it got smashed through. This could get left behind because it was created in the formation of an engulfing candle to the upside. When you've got something like that, you've got something that's very, very heavy for price to get drawn to, a bit like a magnet. So I would be cautious of that one. You might see price even come back down, take this low, and then shoot off from here. So this could just be price breaking out, come back down. I don't know. That's just my instincts. I can see longs. I do see the argument for longs. I don't know. Where it's leaving this trail of liquidity behind. And where it started from up here, I don't know. I'm still not entirely convinced.
I'll show you what I'm looking at. Give me a sec. There we go. So that's where I'm in at on euro. Right.
That's
so
right.
That's sort of what I'm seeing as far as things. And then that would be the top side target around that 116.80. But if we only get as far as like say 45 or 40 here, the recent top, then I'd be happy to take that for today as far as intraday, but ultimately be looking somewhere up there. So that's where I'm got in earlier on that initial jump up. So I don't know, the way I'm seeing it looks all right. But I will say that, yeah, like I touched on, it seems as though the overall velocity of activity for today has slightly slowed down. So, I mean, whenever you have that, you can often just move back up and say 116.20, pull back lower. And then if there's enough momentum there, purely because there's no further momentum higher, you can end up back down at 115.80. But at least for me today, that's sort of my outlook at the minute.
Percent gain, I don't know, if I'm honest. Yasin, I think Yasin is in the chat. Yasin, if you're there, mate, could you let percent gain know if the spreads were adjusted at all on gold? If Yasin isn't aware, percent gain, then head on over to the Discord and head into the support channel, and the guys there can help answer that for you. So yeah, I'm just catching up on chat. Let's see, silver, yeah, we did that. Okay, all right, I'm just making sure we didn't miss anyone whilst we were going through those other assets. Okay. The girl, Jason, has a name. Her name is Anastasiia, and she has finished for the day. She will be back tomorrow.
Yep.
Do you ever use trend lines to trade? This is a sensitive subject, okay? So I don't want to upset anybody, but I think it's fair to say that LJ does use trend lines, but not in the traditional sense.
Yeah,
Okay?
probably not how people think. Yeah,
he uses trend lines like a squiggly line, so it's a bit more fast and loose, as they would say. I think that's is that a fair argument?
Yeah, and I think that also highlights exactly their usefulness, right? Is the fact that I'm not
You can make
I'm just freehand drawing the thing, right? Okay.
You can make them fit whatever you want them, whatever analysis you want them to fit. You can make them fit by drawing them squiggly. That's basically what you're saying. Yeah.
So generally, any trend lines and stuff, like you're just doing it to kind of mark out. Like you can very easily see, like visually, it's the same thing with putting indicators and stuff. A lot of it is just a very quick visual reference. So you can look at whatever assets you're looking at and just go bang immediately and recognize the degree, velocity, angle, speed of something that's happening. And in that sense, particularly if you're scanning over a number of different assets, it's very helpful to be able to do that quickly. Or particularly if you're trading, much nearer term, intraday, say news and stuff is going on, you want to trade the aftermath or something, and you're trying to dip around to all bits and pieces. It's just a very quick visual. Because otherwise, if you want to do all this stuff fully appropriately, have it all systematized with data, with like algorithms and stuff churning out all those numbers, then you got to configure all that. But yeah, I mean, you can clearly see then, like I just draw that in. Okay, pretty clearly we've got a slight upward angular momentum in price action. That's basically what you're looking for. However, on the top side, as soon as we approach top side levels, they are tending to fail. And then we've still consolidated this general area. However, you now have slightly lower highs, but you also have slightly higher lows. So you're basically just sort of marking out a range, and then you can clearly see that since the market is generally agreeing that we're trading in this sort of general area here, right, where all the scribble is. Okay. If you see price go outside to the upside, pretty clearly the market is agreeing on higher prices for the certain asset rather than lower prices. So all it is to just quickly visually acknowledge and see that, especially if you are dipping around various assets or trying to say you're looking at euro, then you want to see cross correlation with the pound. You might have like that, and you see that, okay, the euro is broken out, but the pound is still very much in the range. And then you can see, okay, is this like an overall dollar driven event, or is it primarily euro driving and it's broken out because of certain areas that's tapped through, and hence you can make a larger holistic view on this is a USD move, or it's just asset specific that has happened to hit certain levels, and then swap up your trading approach based on that. So yeah, they're just kind of general guidelines, and hence why I like to just draw them in freehand as well, which hopefully highlights they're not it's not some law of physics or whatever, right? It's literally just a visual guide.
Yeah. Euro USD, there's a few of the guys saying that they agree with me that they think it's going to fall. Thank you guys. I appreciate the solidarity. I do want to point out that the 15-minute is also that perfect equal low. So yeah, again, like I say, it's come back down to that zone that I talked about, and it's broken past it. So I would say we're looking at shorts for the time being on Euro USD right now. I think we're going to be coming for this level here as things stand. If we have a look, we also have, this is actually at the bottom of it is an inside bar on the 22-minute. So yeah, and if we see here, we've come into this little pocket into this little pocket here where we had 2 attempts to push down, which weren't held on the 30-minute. So there's still sellers sitting in this area that could push things back. So, so yeah, I mean, not certain because you've still got all of this cluster up here. So there's definitely plenty to aim for higher up. Yeah, just that's how it's looking for me at the moment.
What I would say is I'm seeing this here. So high lows and then high highs on the 15, right? Since this is on my time, that's about 3 hours ago or whatever, right? So
yeah.
So the past couple of hours, sort of since London, we've made that kind of a structure. So that's where my further confidence personally is coming from. But I can definitely see both. I think we highlighted both in ABL as well, and just since per the 2 structures that I laid out, we got that hold around 116. So
yeah, exactly. And I think the other thing as well, if you're looking at the sells area, we've got this big wick here that really didn't trigger much of a move. So again, you've got all of these sellers sitting in here in this area, looking to sell. Hence why I think we might be selling. And yeah, we'll see how that plays out for the moment. Let's just thank you, Yasin, for coming back to Fabian. Much appreciated. Jason, disappointing that you don't want to stick around for us. I know we're not as blonde as Anastasiia, but and I'm certainly not as smart as she is either. But LJ's here. He can at least go toe to toe with her in terms of analysis. And
my drawings, just like Venetius was saying,
Yeah, exactly.
We got the arts here. We got Picasso.
I always say that looking at the markets is like looking at artwork, right? When you look at the charts, it is like how you interpret a piece of art. So I completely agree. Pound yen testing the December 2024. Let's have a look. Yes, it has gone higher. It is coming into this next higher range. Looks very, very good for longs right now. Although I don't think it's going to go very far. I think it's going to stall potentially here. 954. Yeah, I'm expecting sells to come in once it gets into this area. I expect us to start seeing some sells coming in. Not necessarily changing anything fundamental, but this has got a cluster of. You can see this. After this move here, we came up to this wick and we took this high here and off we went, and we went on a massive sell-off. So I expected to see some kind of reaction, even maybe down to this kind of level here into there. So you could maybe look for sells from this area down to there, potentially.
I think pound yen will definitely very much I think like we saw last week, some of these high points when everything fell off. So dollar yen from 148, right? So I'd say, again, at the moment, what we're looking at is for the crosses, because we have seen slight marginal breaks of the highs for the past 2 days. But if you see dollar yen stall out, then I would keep an eye on that to see if then euro yen, pound yen, or your other yen crosses are also going to come off in sync with that. That's tended to be a great trade the past number of weeks to watch a lot of them. So
Maria, I once knew a girl called Maria. Thank you, Maria. Appreciate you the reminder. That's very kind of you. Anyway, moving on. Let's have a look at USD CHF or CAD CHF. Let's go take a look on those 2 American pairs, should we say? USD CHF broken lower.
At the minute, feels like I think we're going higher. Just very near term, I'll put it that way.
Yeah, I would say so, because we've broken the lows on the daily. So we've had this this nice little structure on the daily, pushing us down. If we go to the 4 hour, yes, we've been on this very, very big run down, right? But because it broke structure, I would probably be looking to sell maybe in this nice area here. This might be a really nice area around the 81 area.
That's what I was looking at as well.
On USD CHF. CAD CHF, we're probably looking at something somewhat similar, but doesn't quite look the same in terms of having reached that low. So CAD CHF, I don't know. This doesn't look as clear as USD CHF. USD CHF, because you've hit those lows and you've broken those lows, it feels like sells could be a better opportunity. This one, I'm just not seeing anything at the moment. I mean, unless just coming back into this area and selling from here, potentially.
Yeah, dollar franc, I'd say from 81.10, and then CAD CHF, similar basket. I'd be looking at just below that 59. So in order to get into the trade, make sure you get tapped in 58.95, put it that way. But then I would, very much be leaning on the sells again further from here. So
this also might be a nice area to get in for sells. This one here, 58.973 to 59.028. Nice little pocket, potentially to get in on. Gerald's asking for dollar yen. We did look at dollar yen earlier. Dollar yen has been one of the best performing pairs today, with significant bullish momentum coming in. It hasn't gone wild, but it's just, it's just been making its way up bit by bit by bit, and basically closing off essentially at least as much as it can of this wider move, right? Because if we look at this on the 4 hour, for example, that was one hell of a pump, and then it was one hell of a sell-off as well. So there has to be some kind of equilibrium achieved in the market for the buyers and the sellers. So it's not going to just carry on endlessly going up and down just between the highs and the lows, but there is certainly going to be some kind of pullback before the sellers continue. So yeah, and I know LJ's of the belief, guys, that the dollar has reached the highs of that it's going to have ultimately on a higher time frame, right? I still think that if we look at Dixie, that there is a bit more of an opportunity for us to pull back up and retest these areas here. We've got this gap. Let me just make this a bit bigger. We've got this gap from Monday to Tuesday. This candle here does indicate to me a lot of bearish sentiment towards the dollar. I completely agree. But I would just be curious to see if we can get a retest of that before seeing sellers come in. That's just my I don't know, spidey senses, for want of a better phrase. But you reckon, LJ, we're not going to even necessarily go that far?
I think there's you might have a tiny bit more in it, like just like the dollar franc we were talking about. So if I go over to mine, this is actually where I had kind of the level mapped out before for an entry. So it's just by that 146. So it's a little bit higher than where we are now. We go to half an hour, something like that. So I think that's kind of what I'd be looking at, but I'm not looking for any further height back into, say, 147 or so. I think that's way too much. The other thing with obviously it being Wednesday, dollar yen running up, what happens on Wednesday? The rollover? Triple. You get, triple in one day, right? So obviously you want to pick that up, hold the carry overnight, then just sell it tomorrow. Bang, you get, triple interest on the Wednesday as well. So you often do see a lot of these popular carry trades on that, on the Wednesday, getting kind of bid up for that as well, and then tend to come off. Not always, obviously, the predominant, macro other headlines are going to dwarf that. But seeing as we don't have heaps going on at the minute, I wouldn't be surprised.
VS Navinesh, explain the 5ers versus FTMO. I'm not really sure there's anything to explain. That's not kind of what we do here. The 5ers does their thing. FTMO does their thing. They are both highly regarded prop firms in the industry. I would say the top two. And they both have their programs, and they both have their traders, and I don't think you can go wrong with either of them really. But this is the 5ers stream, so we're not really going to. It wouldn't make sense for us to start talking about FTMO and saying, oh, this, FTMO is this and that, because they're not. Both brands, both good brands, highly respected and respectful to one another. So if you're looking for some kind of slagging match or something like that, you come to the wrong place, mate. Go onto a forum on Forex Factory or something and check it there, because that's not what this is all about. Yeah.
Both good brands, some similar crossover in offering, some a bit different. Have a look, size up what works for you and what you're looking at, and then there you go. Simple exactly. As that. Not much more to say.
That. Just looking at USD JPY, guys. I mean, at the moment, we have reached an interesting point, I will admit, on the 15-minute that I didn't notice earlier. We've got this big long wick in here, where we had a lot of orders come in on this 15-minute candle here early this morning. Early yesterday morning in Asia session, and then we had a couple of times retesting it and then push off. Now, these two wicks weren't respected, suggesting that the buyers are outbidding the sellers, and you do have levels such as this on the 15-minute, and so on and so forth, to suggest that there is higher level liquidity. I mean, if I was to go through and mark this all out, there's just tons of it all over the place. So I'm struggling to see where is it going to properly react from. It could happen here. I'm not saying it won't, but it's a very fine balancing act where we're kind of in this, for me at least, we're in a little bit of no man's land, where from here, we could quite easily go up higher, or we could quite easily come down lower. Where do you stick your stop loss for that? And how much risk are you going to put on it to make it worth your while? Do you see what I mean? Like if hypothetically, if we put a trade on right now, right, then if you're going to be conservative about it, you need to kind of put your stop losses down here, right? But what are you targeting? What are you then targeting all the way up here? Okay, maybe a 2R if you're lucky, but it's going to take a couple of days to play out. I mean, if that's your strategy, then fair enough. But it's not my cup of tea. I don't know.
Yeah, I wouldn't be running against the larger dollar selling framework and stuff we had going on. But then at the minute
the other thing would be is, where would you put your stop loss for a sell? Like if you put your stop loss for a sell here, yeah, okay, you might catch it and you might sell off, but I don't know. I don't see it. That looks like a massive stop loss for me. But that's just because I'm not used to putting such big stop losses.
Yeah, well, that's where I'd go back to some of the previous days sort of price action, not just the sort of recent run up to 148 and collapse. And then I'd be looking at where's another some relative heads or something that we had. So I guess the most immediate one you see is that 146.33. Yeah, there. Yeah. And so you could be looking at that and say if you've got a swing, we're starting to come up on that. What's it called? Trend line support down there that we've sometimes this is one that can be useful, that that's been tapped into repeatedly over the past number of weeks and respected every single time, and very much just magnets to that. And that's where you can go into deeper math stuff of calculating, price movements and ATR, and then factoring that in with like options levels and all these kinds of things. And that's kind of how this comes out. But you could then be looking at say like a swing down towards that 140 to 141 somewhere area, with an entry somewhere here. You could even go as far as like 147. So you've got like a 120 point stop with about 500, 550 target, right?
Yeah.
You'd run something that would be a very like grift trade kind of thing.
Yeah. Data decoding. I don't know why you're spamming the chat. Please stop spamming the chat, or I'll just simply kick you out. All right. The giveaway question is in the link. Okay. All right.
But yeah, I ideally want to short from here. I would be waiting for close to that 146 at least, right? Which is sort of what I was looking at, and then just seeing how it reacts around that just round number. If you at all edge through it, then I'd be scrapping that and just going straight for 146.30 to short from there, or just a touch below that or something. But yeah, overall, I don't particularly like it very much at the minute. I think if you got long earlier today, hold on to it. I wouldn't be in favor of jumping in now.
Yeah. Sufian is saying the yen is weak because they decided not to raise interest rates despite rising inflation. It's true, but we've also got to remember that the yen is also well known for making random decisions at random times. So just because they haven't done something now doesn't mean that they won't react to something happening in the market. They're on, they are, I'm not saying they're the opposite of the Fed, but the Fed, we will only do it on our routine and our schedule and our calendar, right? The Japanese are less concerned about sticking to some kind of schedule or routine. If they see something in the numbers, they'll take action, right?
Yeah, and Japan as well. Like that's been the story for forever now, right? They continually want to get off the floor of basically effectively zero interest rates, right? And they just can't. However, just like you are saying, there is a slight bit of inflation finally coming through, which has been their end goal for the past 25 odd years when they started doing QE and everything way before everyone else, and all their other experimental financial tinkering, to the point where they own like 80% of the entire stock market, 80% of the bond market. They pretty much don't have a market at that certain point, right? So they're then trying to unwind that, and their sort of debt to GDP, because they've got the aging population, is astronomical, right? So it's been very hard for them to unwind that. But part of that is, yes, they are getting gradually towards that now. And then we also do have the now forward outlook that the Fed will at some point move to reducing rates. So that's why we're seeing that combined with the overall Trump effects of dollar down, and they're just the general incentive or desire from the administration and from a government debt standpoint as well, as far as the interest bearing from their debt. They do want rates down. They want the dollar down. That makes all these things function a bit better. Also, outside countries want the dollar down too, because it makes everything more expensive then. So
yeah, absolutely. Orkan, I'll come to the FTSE in a second. I've got it up on the chart, but just very quickly, Nuco official. We have the official Nuco in with us today. Welcome, official. Yeah. What about the competition? The competition is 5-10K high stakes accounts are being given away every day this week. All of the draws are taking place tomorrow afternoon after 12 o'clock UK time. All you got to do, click the link in the chat. It's pinned up there in the yellow box. There is a pinned link in there that you go and click on. You can also find it in the description down there below LJ. And all you got to do is go and click that link, log in. You need to answer the question. The answers are there in the question. It's multiple choice. The correct answer is the secret code to unlock that entry. You then have 4 more opportunities to get an entry by liking and subscribing and sharing and adding a calendar invite for tomorrow's live stream. That gives you 5 entries for today's giveaway. As I say, tomorrow will be the draw. We have also got giveaways from yesterday and on Monday, which are still open. So if you go and check the live streams from Monday and yesterday, you will find in the description the links with other questions for you to answer and to get your entries as well. Super Mario Sunshine 888. The answer to the question is go and find out. Go and check it. I'm not going to give you the answer.
That's the point of the competition. You got to sort of read through it. It should be descriptive enough you can put it together, right?
Why would I give you the answer? Why would I give you the answer? That doesn't make any sense. So yeah. David, we're going to come back to your question in a second. I'm just making sure that I don't miss any others. And Dubakor, we take trades. We do take trades, but we're not going to just take trades for the sake of taking trades. So if we see a trade opportunity, then we will take it. But you've also got to bear in mind that we cannot watch the chat, read the chat, look at the charts, and look at all the different assets that everyone's asking us to look at as well, and then also decide, oh, this is a trade, right?
Probably been in here like 5 minutes. So
Dubacor's been here for a while. He's been here for a while, but yeah. Just to clarify, this isn't advertising. This is part of the 5ers community. We're all 5ers traders, so we are here to be part of the wider trading community for you guys. Yeah, Super Mario. It's Luigi. It never hurts to ask. But no, we're not going to give it to you. When's the next competition, Commander Chief? I'm not sure what competition you're talking about. But we're doing giveaways every day. So. Yeah, and there's one yesterday, and there's one the day before yesterday, and you can enter both of those, as I just said. So there you go. And there's another one. And
there will be for the 75k as well.
Well, we don't know what Jonathan's going to do for the 75k.
Whatever that'll be.
Who knows? Yeah. Who knows? So yeah. FYI, that's good to hear. Good to hear. Glad to hear it. Alrighty, let's go back and pick up some of these questions from earlier. So Nuko official, we've answered your question. Orkun is asking on the FTSE. So Orkun's asking on the FTSE. FTSE it broke out here and it's pulling back down. I don't like the FTSE. I know I'm from London, but I just do not like it. It's a horrible, horrible asset. I never like the price action on the chart. But if you were to ask me if I was to kind of make a call on it, I would say it's short. That's my kind of somewhat naked chart assessment of the FTSE at the moment. As it's forming on the 8 hour right now, it looks like it's selling off.
I feel like
an hour and 15 minutes to go, but it looks like it's selling.
Yeah, I often don't like the FTSE either, to be honest. In general, sometimes there's been some good periods, when you've got fiascos going on around the UK, and so you've got extremes of pessimism or optimism, that kind of thing. But where we are right now, I would say you've got the NASDAQ, you got the S&P and stuff looking very beautiful right now. So much clearer. They've got momentum. They've got eyes on them, that kind of thing. I would be saying stick over there, to be honest, rather than some of the other indices at the minute.
Then, talking of the NAS has, in the last 15 minutes, whilst we've been talking, has broken new highs. So the NAS is another new high. So and that is before New York Open. So could be an interesting day for the NAS. As LJ says, the FTSE is not a bad asset or anything else, but it's just, I don't know, I feel as though since Brexit and all the other stuff that the UK have gone through the last 10, 15 years, it's just lost its shine. You know, the FTSE as an index just doesn't have the same clout like it used to. You know. And believe me, it pains me to say that as a Londoner, it pains me to say that, but it's just the way I feel at the moment about my London tout.
Indeed.
The Dow's struggling though, isn't it? Look at the Dow. It's not getting that same momentum.
That's why I don't like the Dow.
No, but even the S&P 500 is also not really getting much momentum.
NASDAQ is the big boy, right? Especially as well, you guys investing. I would say not financial advice, but you take the past 20 years, NASDAQ has basically doubled performance of the S&P, right? So a lot of people look to buy just like the index, buy like an ETF, something like that.
Yeah,
NASDAQ rips, and if you actually go through, look at all the companies in there, you're like, oh, of course, no wonder, right?
Exactly.
These are all the companies of the future. You've got that tech element, which everything in the future, frankly, is going to be tech.
Yeah, exactly.
And right now, they're seen as growth and tech companies. That the future period, they'll be seen as the blue chips, just like the old blue chips were growing and expanding once you had population boom and all that kind of stuff, and now they're kind of dead. And one day, Apple and Amazon and whoever's still around will be kind of dead. But right now, they're in their favor.
They're in their heyday, exactly.
Yeah.
Henry, I think Henry's just trying to get me to do more accents today. I don't know why I'm doing accents today, but I feel like I'm just doing. It's like FTSE is like dirty water in it. Is that what you want, Henry? Dirty water. There you
in
go.
It, bruv.
He wanted the London accent in it. You know, give me some dirty water. Yeah. Question I wanted to come back to. So David, Motorcar's asking first. Let's say I believe a specific pair will reach a certain price in 1 to 2 months. Can I make a single trade and reach my target on the 5ers table? Not sure what you mean by table, but yes, you can swing trade and you can hold it. However, your account needs to be active. It needs to have some kind of activity every 30 days. Now, I'm not sure if an open trade, Yasin, if you're there, mate, if you could just confirm for me in the chat. I can't remember if an open trade counts as activity on your account or not. But
I believe you do have to modify it to some degree. So you could just change the
some kind of modification or
like
something. Yeah.
0.1 and then
there has to be something.
It just shows that you still exist. You haven't randomly, God forbid, you got hit by a car or something, and some weird stuff, right? As well.
In other words, they want to know that the account is still being managed and logging into it isn't sufficient, right? So as LJ says, it may be some kind of modification to the trade, changing your stop loss or something like that, even by 1 point or 1.
Yeah, and you can just change it back after, right?
Yeah,
so it just shows that you're active. So it won't disrupt your trade, it won't disrupt the idea, whatever. But it just puts that in the activity log that'll update the system and keeps it live.
So yes, theoretically you could, if your risk was right and your lot size was right and the trade was going to make you that amount of profit, then on a hypergrowth account, that could get you funded with one trade.
That's the only other caveat. Yeah, on the other ones you can. On the high stakes that won't work because you need the 3 individual days of plus 0.5, which is individual trades. Not just 0.5% growth. It's an individual trade that has made 0.5%. So
is it individual trade? No, it's cumulative profit for the day.
Sure. Equity though? I don't think so.
So it doesn't need to be on one trade. It can be. It doesn't have to be on one trade. It can just be on a given day. You have to have made a net.
No, that's what I mean. But I mean like a separate trade, not like one running trade that's gone up 1% one day. Goes up
right. Sorry. Yes.
Yeah. So it's
each day has to be separate trades. Yeah. Sorry.
Multiple trade.
Exactly. But boot camp, you could pass one phase with one trade, and hypergrowth, you could get funded with one trade. I actually scaled up a 10k hypergrowth up to 20k hypergrowth last year with one massive trade.
So yeah, if you're a swing trader and want to do 1 to 2 month trades, then yeah, you definitely can.
And David Hay is in the ring. I think it was David Hay. Wasn't that the name of the big boxer? I'm sure it was. But David Hay is in with us, asking a question. Any idea why the Dixie is at this low despite the Fed is in its wait and see stance? The Fed rates are still high. What would happen the day they cut? LJ, this is your bread and butter, mate. I'm not even going to bother trying to answer this question.
Yeah, so they have been in sort of a holding stance for a little bit. The general consensus, even they've acknowledged that they've probably waited a little bit longer than they should have. Again, you got to remember the Fed is always lagging. They're always behind the curve, right? And then particularly what's going on now is that because of the tariff situation, that's made them further put on the brakes. And then not just the tariff situation, they actually also then have to consider the bills that Trump wants to pass, because he wants to implement all the tax, keeping the tax rates down, right? Which means way less tax revenue for the government. And they've obviously got a massive expense bill per the debt that is built up and the reoccurring interest costs, right? So they're going to have the major reason why that debt burden has built up in the US is from tax cuts, majoritively since like 2001. So if he's trying to implement certain things that are going to lock that in, and then people now go, okay, this is actually locked in, and this was the primary driver. Okay, now that changes the entire rate profile for all of the debt structure for the US in its entirety. And obviously, every single country holds massive amounts of this as well. So that's why they have sort of taken a bit of a pause, even though they would at this point want to start to reduce rates, because reducing rates also has a lag factor to it before it really impacts the real economy. However, because of these other inputs, they have to be very careful where they step, right? So where we are now, we've also seen further from the actual Trump tariff kerfuffle and all that kind of stuff, people slightly moving away from US denominated assets and rebalancing portfolio. This doesn't mean they're throwing them in the bin. They're just rebalancing the, say you want more Euro assets on the books now, a bit more, I don't know, African, UK, this, that, you're getting a better balance. So people reducing that has tanked the dollar a little bit. Obviously, we had the big scaries with the tariffs themselves. However, as also with the Fed, we have seen some of the data points coming off gradually, slightly, right? And we have seen CPI holding down lower. And we have also seen gradually the jobs numbers coming off marginally. They're not crashing, they're not cratering, nothing terrible, nothing scary, but they are gradually moving in the direction that has been expected. So that's keeping the Fed kind of together. Inflation has come off, but it's not deleting itself. Labor market has come off or slightly cooling, but it's not deleting itself, right? They're not falling out of bed. The other component, though, that is concerning is that we are seeing further increased stress on the consumer at this point. That is really starting to flash signals. And so that's always going to be the precursor to those things coming off. So the Fed is now trying to get the clear for a bit of dust settling on the tariff stuff for them to then signal to the market that we are going to look at moving rates lower. That doesn't mean a full drop, but just a gradual steady decline. So obviously we also had the Trump Jerome Powell kind of wars getting mixed up in there, and then the Fed can't be seen to be political or being influenced by the government in any kind of manner, trying to stay independent. So that also created difficulty on that leg. But Jerome Powell going to be speaking tonight. More questions from Congress, just like last night. And we had the Fed meet the other week. Those are basically the messages they touched on, acknowledging that slightly lower CPI, slightly lower jobs, a few pieces coming off. However, slight risk on the horizon per the tariffs that we might get a little elevation in that. And that's pretty much where we are. So we're just waiting for the nod from the Fed to say, yep, we're looking towards lowering rates. That's what's keeping US dollar suppressed. Because everyone knows that's coming. It's just a question of when. And when it does, then we'll really get the collapse.
Yeah, exactly. So David, hopefully that answers your question. Euro GBP, any analysis? Euro GBP on the higher time frame, we've had this big move down, couldn't break these lows, and then kind of pushed back up, come up to the 38.20 level and really just pushed straight away from that, come back down now to the 50. I feel as though it might be in a little bit of a period of ranging between those areas, if I'm honest. If we look at it here, this is the 38.20, this is the 50 level. At the moment, kind of feel like there's a bit more bullish momentum to come back in again before probably selling off to come back down to the kind of the 84.9 area would be at a guess. But yeah, Euro GBP, it did have a lot of volatility and it's kind of just calmed down again. As I say, not really doing a huge amount for the last few days. It's had some spikes and bits and pieces, but not one that I particularly look at very often. Although probably I should, maybe. Udesha apparently had Jonathan offended when asked about ICT concepts and whether they work or not. I wouldn't say that Jonathan was offended. Jonathan is a very impassioned man, and he is very passionate about his trading. The problem with ICT concepts, as we have said many, many times, those of you who are regular viewers will know this, the problem with these is that ICT concepts he's got a very, very strange, peculiar man as the front and the face of it. The guy who supposedly discovered them and, was kidnapped and locked in a cage and forced to understand the algorithm of the markets or whatever it was that happened to him. He has made a lot of money, but he's made a lot of money from marketing things and selling things rather than necessarily from the markets. So unfortunately, ICT itself becomes a controversial topic because of him, not necessarily because of the ICT concepts themselves. ICT concepts themselves are essentially just a repackaging of the markets and of already existing terminology that just exists elsewhere. Every course is essentially just another way of describing what you see on the charts in the same way as somebody else has done, but just with a different name. So yes, ICT concepts can work because we have many, many traders at the 5ers who have been interviewed on this channel and who have gotten funded and gotten payouts with ICT. So yes, it can work. But I think personally, with anything to do with trading, it is not so much about your strategy. It is about yourself mastering your own mind rather than mastering any kind of strategy. But that's just my view, and on that we will leave it there with the conversation about ICT, because otherwise we're just going to end up provoking comments like this from Andy V. Thank you, Andy. ICT stands, I can't trade. See, this is why we don't like it. We don't like ICT.
Just say, yeah, it's a modern thing that's popped up recently. Understand that markets have been around for decades, centuries now. So, start all the way over there and then come forward and then see if the stuff stacks up. And you'll be able to figure out whether the new age stuff is nonsense or not. Typically, if something has survived for a long time, it's signaling to you that it has value, right? If you read something on, same with books are a good example. Read something on the hot list from New York Times or something right now. Chances are 2 years later, it's out of print. No one cares. If there's a book that's still being in print for 60, 50, 100 years, it's because people are still reading it today and it has value that is universal, right? So I would just say that's very new age. Try and go back to the old school stuff first and start there and work up.
Just trade what works for you, right?
If it works, it works. At the end of the day, if it makes money, it makes money. That's what Andy, that's what you're paid in. That's what you're rated in.
Andy, appreciate the attempt to defend myself and LJ here, but Adruit Films, we do take trades. but the reality is that we cannot talk with you guys in the chat. And there you go. You've got a trade there. We cannot
sort of been in for
chat to you guys in the chat and analyze the different markets, analyze the different charts, and try and find a trade. I look for trades on the 1 minute. So, you know, I can't be chatting to you guys and trying to focus on the live stream whilst also looking for 1 minute entries on
an oil trade as well, I think.
Every asset that everybody asks for, right? So yeah, but there you go. You've got a couple of trades from LJ there. But Andy, let's keep it friendly, please. Gold Digger, you have been removed because we have looked at gold many times, and you don't need to spam us with the comments. And Jonesy says he trades ICT. There's nothing wrong with that at all. Guys, it is coming up to the hour, and that can mean only one thing. It means that the man, the myth, the legend, that is the masked trader, is Victor, waiting in the wings. He was telling me earlier that he is thinking of releasing the secret sauce and adding the masks to a merch store. Now, they will be limited supply because these really do give him the edge. So if he does release these, guys, you're going to have to be quick off the mark, because too many of these get out there into the markets. That's it. All covers are blown. That's it. The market is just going to go absolutely bananas. So yeah. Before we go, just a quick reminder, guys. Make sure you click the link. Click the link in the description, or click the link in the chat. You can sign up for the giveaways. We are giving away 5 10K high stakes evaluation accounts all week this week. The draws are going to take place tomorrow after 12 o'clock UK time, live on stream. So make sure you join us for that. You can still sign up for the giveaways from yesterday and today. Those links are still active. They are in the live streams from yesterday and Monday. So make sure you join in for those to get your more chances to enter. For now, that is it from myself and LJ. We will hand over to Victor. Yeah, Saxy, you'll have to ask him whether he's going to sign them or not. So yeah, great to see you guys, and we will see you tomorrow.
See you guys next time.
Welcome, everyone. Welcome to another edition of Trading Live in front of you, or analyzing the market for you, whichever you want. Maybe both of them. I hope you're doing well. This is the 25th on June. Today, that is, if you were wondering. I hope you're doing fine as a trader, and especially as a person. What is up with everyone? I see... we have in the chat people asking about the limited edition of merchandise coming up. Actually, I forgot to do something, but I will leave it open. No problem. Yes, so let me know in the chat. Let us know in the chat how you are doing today. How is your trading going on? Are you thinking long EU or not? Because I am looking at this... I'll go through the charts again, or not again. This is the first time for today. I'll go through the charts and tell you why I think we could have a little pop, maybe a continuation into EU, although a retrace is very much also possible, because look at that extended move we had so far, and we have been interacting with that bearish structure on the daily. Not going to go into all too much details, because that is saved for our analysis. Let me get this maybe like so, right? Something like that. All right. Let's see the chat. How is everyone doing? Let me check. As always, we have people asking for gold, and sure, if we have, if time permits, we will exactly do that, which is checking that shiny object of an asset that gold is. All right, so let's see. No problem. I'll sign them. It's we want a transparent mask. Sure, I will I will connect with our sources where they sell such mask. Let's see. Yes, that's exactly right. For those who want to see me without a mask, right, are actually who want to be, let me be very precise with my words. For those who want to be in a stream where I'm doing the stream without a mask on, you'll have to get on to the Discord workshop of today. We're gonna have in about 2 hours and 40 minutes, right? I do these streams without any mask on. So there you go. Let's see. Enriquez, how are you doing today? Perfect. I'm doing fine. Thank you, Vinicius. Thank you, Nora, for being here, and all those others who are saying hi to me in this case, and everyone else. All right, so let's. I think I went through the chat to see what you guys are walking or talking about, not walking. All right, so let's see. This is what I see for EU. If you have anything you want me to look for, you want me to give my opinion, my views on any pair, any situation, I mean on the graph, any setup that you're considering. Maybe you're already in a setup. You want to have someone else look at your setup and give you some constructive critique, or just pointers to see okay, I haven't looked at this, maybe should consider your direction. There are more arguments pro or contra. It doesn't really matter. If you want for me to take a look at your setup or at your ideas, just hit me in the chat, and I will do my best to do as many as possible. Remember, today we have also the daily the giveaway this whole week. Every day we have one. You have a chance of winning a 10K high stake account. The only thing you have to do is check in the comment, right? The description of not the comment, the description of the stream. There's a link there which is specific for every day, and that will give you entrance after you answer a multiple choice of 4 answers. It will give you entrance to the giveaway. The winners will be picked out on Thursday, right? And Thursday there will be 2 chances. Not only that, there's a little secret, a little public secret, that is that all the other days, Monday, Tuesdays, etc., previous days, the links are still active, right? So you still have a chance. I don't know for how long they're going to be active, but currently, as I understand, they're still active, so you still have a chance of competing or participate in that right now. So don't let that chance pass you by. You might be a winner of a 10K high stake account, completely free. Obviously, it's a giveaway. So Discord, well, the way to get into the Discord community is by having an account with the The5ers. You don't have to be funded. Just buy an account. It can be the smallest one, the 5K high stakes accounts, which goes for $39. That's it, right? And obviously, you get the account because that's actually what you buy. But included, anyone who buys an account will get the entrance to our Discord community, which is completely free, right? And you can enjoy and get everything we have to offer inside our Discord community, which is community, connecting with other people, great community to grow. And of course, we have these workshops that Rich, LJ, and myself are holding at least once every weekday to talk about the market, talk about how we can help you you bring your questions and we try our best. Not only the host, but everyone in the group. It's an open discussion to help each other become better. All right. So for Monday, you say it's not there. I will send a message to let's see, to someone in the back end to see if this is what's happening. Let me see. Let me check here. We'll check. I send a message to those at the back office and let them know that just checking that if it is true what we are seeing. It's supposed to be open. As last time that I understood, it was still open. All right. So before we get to the markets, let's see, anything else? That's exactly right. You have to get access to the Discord server in order to be able to get. No, I mean the hub. You have to have an account to get access to the Discord account. All right, let's continue. Okay, so I'm gonna start with EU and GU because those are the ones that I trade, and I'll tell you everything I think about the market, all the way from the monthly to perhaps even to the minutes, if there is a situation or a possibility, an opportunity for us to trade anything at all. All right, so I'm going to let's see. All right, so the monthly time frame, we are getting close to the end of this month, and as things are looking for EU in any case, it looks that we are, anything can still happen between now and the end of the month, but it looks like we're going to invalidate this order block on the monthly time frame. We'll have to wait for the end of the month to actually definitively get this information, this data point or this fact. It's not a fact yet, so you're not supposed to act upon it. But that could be, once this breaks on the monthly time frame, so in the next couple of months, I would expect price to be going all the way to the next, station, the next level. Not right away, but eventually. Okay, so that's one thing. Other than that, there isn't anything to consider. Not on the. These are, as you can see, I have some drawings on my chart, and that's because of the workshop that we hold, and we discuss many things. All right, so this I will only use it for the daily, not the weekly. All right, okay. On the weekly time frame, we can see something quite nice, which is a gap that is visible on the weekly. It was a weekend gap. Obviously, that's going to be visible on the weekly. And it is very, but very, very bullish. This is almost an outside bar on the weekly time frame, right? It almost took out the low of the previous candle, and it's very close to the high of that same candle. It isn't an outside bar, so you shouldn't treat it as an outside bar. However, it's very near the forces that created this candlestick combination. It hasn't been created yet. We still have to wait for Friday. A disclaimer there. However, if it closes anywhere near where it is right now or above, it would be almost as powerful as a outside bar. Not as powerful, but very close, right? Because it's the same forces in the market that create these candlestick combinations, right? So that's what we see just by looking at these two last candles, the current one and the previous one, that it is quite bullish. Doesn't surprise us because the market structure is very bullish, right? We've seen that the impulsive move is to the up or to the upsides, and these retraces are very shallow most of the time, if they even are present. That's other than that, we have a weekly order block below us. Price almost retested it in the immediate candle, but other than that has not been able to not even retest that. That tells you something about the bullishness or the impulsiveness of how strong that impulse that we're currently in on EU is. Let's go to the daily. So basically, the monthly and the weekly are not telling us anything definitive in terms of a possible setup coming up. They're just telling us that things are looking with a bullish undertone, right? For your intraday trades, not useful. You're not going to do anything with that information, but it's still good to know what the higher time frames are telling us. Okay. All right. So hi, MM. Nice to see you here again. All right. So let's see. We on the daily time frame, and this is what I actually talked about this yesterday. Let me check something in the background. I actually talked about this yesterday. Actually, before we continue, let's go to the 1 minute on euro dollar. And I want you to look at this area, right? We have some structures, some order blocks that have been present so far from earlier, and the market is reacting very nicely to them, right? I don't say that the market is going to go necessarily up. It may not. Okay, the trend is downwards. The intraday trend is downwards, and this is a possible reversal. I repeat, possible. I don't have a crystal ball. I don't know what the future will give us. However, if you enter at a level, right, at the edge, right, where you have very little space to be between where you enter and where the structure ends, and perhaps some margin for errors, and you happen to be right. I understand that probability is not very high because it is against the trend. But if it is, if you do it often enough, you'll get some data and you'll see that you will be able to catch these reversals, not all the time, but even in the minority of times, if you catch a reversal like this and you have something, let's say you catch something from this order block, right? Either from before or right now, I don't know, this is the 1 minute. Let's say you enter when it starts breaking these highs of these candles and you have your stop down here. We're talking about maybe 7, maybe 8 pips, maybe 10, maybe 8 pips in the 8 pips in the I just got message in the background here that the description, by the way, guys, who was it? I think it was Yakishan. In the description, you will find the link. I haven't checked because I'm live right now, but the back office, they're telling me that it is there. Take a look again, and you'll probably see it. Right, so the link of Monday and Tuesday are in their respective streams, right? So only today's will be in today's stream, and yesterday you'll have to go to that respective date, right? Yesterday's stream. Okay, let me know if you can find it. Esdras, welcome here. I understand what you're saying, but I think I don't speak, I know I don't speak, I suppose it is Portuguese. We have a Portuguese community, by the way. Maybe, I think you know, but in case you don't know, it is headed by Pedro, our Portuguese speaking host. And if you're not understanding this, that's fine, because when we finish the stream, the subtitles will be added and you'll be able to get the information translated, or what I'm saying translated. But coming back to what I was saying, I will tell you all why I think this is a great area to be going long. The fact that we have a very nice area to go long doesn't mean it's going to reverse. It just means that if it reverses, you're going to have a very good entry, right? A very specific probabilistic entry into getting a very nice profit out of it. Okay, that's the only thing I wanted to say. And obviously the take profit can be much higher than what I just shown here, because the higher time frame is bullish, meaning if we get back to that, we switch back into the direction of the higher time frame and we actually have a continuation, you're in at a superb entry. Okay, let me go back to the daily, as that's where we were. Let me check NASDAQ. Someone is asking. Perfect. We'll take a look at NASDAQ. No problema. No problemo. Muy bien. All right. So, perfecto. I trade EU and GU mostly, but technical analysis, especially order blocks and quasi, they are universal. So I can look at any pair and let you know my ideas, and you will be able to. You will have to adapt it a little bit. There are nuances, but you will be able to use it as much as possible. Not as much as possible. You'll be able to use it quite adequately. All right. Yeah. So on the daily time frame, so what we have is this is a trade that I still have open on my master account, which is still holding on. And you can see that you need to be patient with these higher time frames trades. Market doesn't go straight away to your targets. Okay. Let me come back to the daily time frame. That's what we were saying. One thing is, I wouldn't say I'm very confident that today and right now we're going to switch back to bullish, but I'm pretty confident that at some point we will very soon. Because why? The reason is that we created the last order block we created was a bullish one, and it wasn't just any bullish candle. It's the one from Monday, and it's very, very bullish. It's an outside bar on a daily time frame, right? And where is it? It's supposed to be. This is the bearish order block on the daily. That's where there is a supply. That's what created the order block in the first place. But as you can see, that supply wasn't able to avoid this outside bar being created. That tells me that the supply is not going to hold very long. It may push price lower, yes, but it's not something that's going to push price likely much, much lower, at least not to what we have seen so far. If there was a bigger supply here, much bigger than the one that created the push from that bullish order block before it was actually made, then we weren't supposed to close as bullish as we did. Meaning that the likelihood of price continuing further is quite high. Obviously, I don't know when that's going to happen, if it's going to happen today, tomorrow, or even next week. We don't know that. But at some time, at some point, it will quite likely happen, right? So take that into account. And based on this order block, actually, you can target. Let's look at the ATR. Currently, the ATR, the one that created that order block, is 89. Make it 90, right? Because it's still an estimate, a rough estimate of what you can expect. And if you take the high of that candle and expand that 180, means twice the ATR, you can get an idea of what is possible. 180, not 90. So 1723, let's mark that. Awesome. So that would be a macro target that I would, where do I have that? I don't have it. Well, doesn't matter. I'll just leave the level there. Based on that price action, based on this behavior that created the order block, you have a quite high likelihood of hitting that target. If you are, holding it for a swing trade, obviously, because this is the daily. All right, let's continue. So what else do we have? Do we have let me check the chat. I'm known to not see the chat very often. Zalan is asking how the winners are selected. It's by random. Each winner is selected randomly, right? It's a random. It's built in a number, not a number generator, but a random picker winner picker will choose, right? So it's all fairly done. Okay, So what I was saying was that we did have a, let's see, we did have a push, right? Very strong push. That is what created that daily order block. And we did have a quasi. Let's see if I can point that out. This is the quasi, right? That's the neckline, right? And that's the head, the left shoulder, the established downtrend. Price breaks the neckline. This is a very nice example of how, you know, price move a lot of the time. That's why I trade quasis, right? That's the neckline. Price breaks it on the H4. And where does it bounce off? See that little fella here? That entry order block on the H4? Guess what? Price gets all the way into it and then shoots off. That is, you know, business as usual. That's how that's how the a lot of the time, not always, but that's how price usually reverses. It breaks the structure and then tries to break or continue at failing at it, returning back, which then forms the right shoulder, and then the rest is history. It just leaves you behind. If you think this is going to come back when you know the acceleration gets hit, then you're going to be very, very trapped in this, because it's not coming back usually. Once it hits, it keeps on going. It doesn't travel this much, of course, but once it hits, it typically runs. All right, so that's one thing that makes us understand how the anatomy of this reversal work, right? Breaking that structure, coming back, reacting on a relevant order block, which is this H4, as I put on for you. But now we are on the daily time frame. We do have a bearish order block, but it hasn't been invalidated, right? Price hasn't closed above it, so it's still, you could consider, even though I think it is weak and it will not hold for very long, truth is it's still there, it's still active, still valid, etc. So if we go to the H4, the fact that I mentioned that is, you know, as long as the daily bearish structure is still valid, you need to take that into account. Okay, so if there's any bearish structure coming in, you should consider taking a short from there. On the H4, what we do see here is, yesterday I had a trade, right? And that's based on that daily time frame, which it didn't really have follow through, but it did leave this H4 order block before that trade or after that trade was closed. It did create a fresh order block, the H4, and then on the H2 it had a equally it's the same level, but it is actually a little bit on the H1, which is not fresh, so I couldn't use that. And the other thing that I used was this. Let me see if it was which one it was. Yes, it is this one. So this is the area that I am looking to short, looking for that reversal or that entry, because this lines up things on multiple time frames in my direction, right? Thinking, right, this will at some point, maybe from here, maybe from lower places, we don't know that in advance, but if price is going to reverse, it makes sense that it's going to do that on an H4 order block. And if you can refine that order block to a 1 hour, a fresh one, then you're increasing your probabilities. And your job, or at least my job as the trader, is not to predict where the market is going. It's just to be there, get an entry in. If it doesn't reverse, then I'll be wrong and I'll lose 1 hour, and that's fine. But if it does reverse, then I'll be at the right spot, at the right level, and I can benefit when it switches back in that continuation of this kind of move, right? May not happen today, or perhaps it will. We'll see. it looks kind of weak as we're speaking. It doesn't have that let's see, it doesn't have that buying pressure coming in, and we do have one red folder news, which is the chairman of the Fed speaking or testifying. That is something that could move the market, but it is still in about an hour and a half, 90 minutes from now. So I don't think that's anything, that's not going to have any effect, obviously, right now. Okay, so that is the idea. That's the idea why I'm looking to short, to go long, I mean, this area, right? And if we look at the H5, for example, right, so we can see that quasi coming in, right, breaking that neckline and coming back to that order block. It has a good reaction, and it did go higher than this high, so it should not take this low lower. If it does, then the setup is invalidated, right? But as long as it doesn't break these structures, this is a great area to a low win rate area, right? Low probability that it will turn, but this is the last edge before it turns. If it turns right now, that is the area you want to be getting in for. Let's see if it validates the order block or not. All right, so I'm gonna leave this open, and we can see if the idea is, will this bounce or not. So I'm gonna put a question mark, because that's what you need to think about these setups, right? They're not a prediction that price is going to reverse. It's, will it reverse or not? And how would you know? Well, one of the things is you could go to the lower time frame to see buying pressure coming in. We're not seeing that currently. These candles look very, very bearish. If I had to think what's going to happen, I would say it's going to break it, right? This looks like, when it does, it looks like it looks completely like it's going to break it. But hey, that's how it looks until it switches, right? So it might be very convincing until it switches, and then perhaps you're already late of getting in. Okay. We'll see how it reacts to the market condition. I'm gonna stay there. So if anyone, the way to trade this is to take an entry. Either you put your stop below the structure with some leeway, right, or below the whole structure, and as much leeway you want or margin you think you're gonna need. That's up to you. But the point is not getting into this trade blindly. You have to know, you have to get a sign from the market. I'm not talking about a paranormal sign, something coming from the sky or anything like that. What I mean is price action, obviously, right? Price needs to tell us if it's going to reverse. You will have to see it, at least in some form, shape, type, time frame. It needs to tell us that buyers have come in. They have taken, at least for a couple of candles, they have taken control and are likely the initiation of a reversal. If it doesn't happen, it's best not to enter at all, right? Because why waste the fact that the price has been on a, typically always the quasi is against some kind of trend, right? So it's the easy path for prices to just continue. So you have to understand that, and the quasi, they help you identify where to enter, but it doesn't mean they're going to work all the time. They just help you to get in the proper area for that long. Obviously, the TP can be as ambitious as you would like, because you can extend this either to today's high, or maybe the recent high, or even something higher, as I indicated earlier, based on the daily time frame. That's up to you, how your style of trading is. We're gonna see it. I don't see. Let's see if the market reverses from here. This is just a suggestion. Do you and it's up to you what trigger you accept as well as a confirmation, right? Is this a reversal or not? That's up to you. I have my rules, but it's not about my specific rules necessarily. It's about you finding out something that works for you, meaning a either candlestick combination, either some indicators that help you see deceleration and then reversal, maybe oversold, maybe divergence, maybe a combination of those EMAs, you name it. That's up to you to find out what works best for your approach, because you can obviously trade this so many times, so many different ways, and there's no one correct way to do this, just different ways, right? You have to figure out what works best for you. In the end, it's your money, it's your time, it's your life. You have to take responsibility for it, and as I do with my strategy. Okay, why the mask and hat? I will tell you the secret. The mask and the hat, these are the two most essential ingredients of my secret sauce. If it weren't for the mask and the hat, I wouldn't be funded nor profitable. I like these questions. All right, so Raj is asking, what is your entry confirmation, right? What is the trigger? Well, I mentioned this just now that I don't share that. It may sound very weird. I share a lot of things and I don't share exactly that. I don't want to rob you from the experience of checking what works and what doesn't, because there's a lot of understanding that you will only get if you do that practice. Observe price when they reach these structures. How do they, what do they do before they reverse? And those cases that they do reverse, it doesn't reverse all the time. This may happen. This may just continue, right? If the buyers don't come in pretty soon and it leaves the structure, it will just as easy just continue lower. Happens all the time, right? These quasis are, they're not the holy grail. You still have to read price action. You still have to use everything at your disposal to put the odds in your favor, right? And finding the trigger is one of those steps. So I could give you what I use as a trigger, but I think the value of the exploration and discovery of your edge is just as important. I would even say it's more important than knowing the rule. Let me repeat that. The value of the exercise of discovering your edge, finding out what confirmation rule works and which one don't, the journey, the discovery experience is much more important than the actual rule, which I can hand you out easily. The skill, it's like learning how to fish instead of getting a fish a day, right? That's the difference. You want to have that experience. That's why I don't share these rules, because it's not about my rules. It's about you finding out what is best for you. My rules may or may not be, good for you, adequate, right? They're specific to my strategy or to my, and the entry is only one piece. There are so many other pieces that you need to find out. So even if I give you my, a couple of things that I do, a couple of my rules, you will still not have the same results, because there are more things to the strategy. It's not just the entry and the order blocks and that's it. Although those are, very important, obviously fundamental parts of the strategy. Okay, let's see. Yes, Vinicius is giving out great advice. Exactly. Yes, I like that. Thank you, Vinicius. Vinicius is one of our great members, and here you can see how he is very generous with his efforts, helping other, and that's exactly the kind of members we attract in our workshop, in our Discord community. And that's the value. That is the value of our community. others being willing and able to help each other, and the collective effort. There's nothing more powerful and helpful than having not just one person, but a group of people willing to help you. And you, in order for that group to exist, you have to be the same way. All right. Let's see. Yes. Perfect. Enriquez, maybe that's your missing link. Maybe that is what you're missing. Maybe that is the missing piece of the puzzle for many traders. It's the mask. Who knows? Who would have thought that? All right. I'm trying to go through the messages, and some of them are more than a couple of sentences. So that's why I am having little pauses here and there to read them, because your messages are important to us, right? We want to know, we want your engagement, your question. We want to know what's bothering you, or what is your struggle, what's holding you back, whether it's missing a mask or not. I'm being humorous, obviously, but you know, you get the point. Whatever it is, we're here. Yes, I do. I do. Whatever it is, we like you. We like to have that engagement with you, and we want to help you. I say that all the time. Help you as much as we can, in order for you to succeed. That's the core principle of the 5ers. We're here to help you, right? Okay, so I think I broke down EU enough, and we can revisit this anytime in the future. We still have 1 hour and 20 minutes, or a little less than that, to look at the market. Maybe we should look at something else. Anything else you guys want me to check on? In the meantime, I'm gonna play a little clip here to tell you guys about something interesting. I'll be right back.
Listen up, traders. We got a new competition with massive prizes launching at the 5ers. The top traders, they will win high stakes accounts, and everyone in the top 100 will get a prize, including hub credits and bootcamp accounts. We're actually doing this every single Wednesday, week after week, so you will always have a chance to win. It's fast, it's free, and it's easy. All you have to do is you sign into the 5ers Hub, click on the contest on the left menu, and join the upcoming competition. We hope to see you all there. Good luck.
All right, one thing that I can give you guys, if let's say this entry that I gave you, it's an area, and I told you guys you have to figure out the entry rules for yourself, right? I'm already giving you the area is a big help, but of course you have to do the rest of the work if it works out. And the probabilities are quite low, right? My win rate is below 50, way below 50, okay? So less than half the time, the areas that I indicate and they signal, half the time they actually reverse, right? Around 30%, sometimes a little bit higher, sometimes even a little bit lower, okay? But if for this trade to work, and this is something that I will be putting in my, I don't have the course, but I'm working on a course to be posted on ABL, another community we have, educational community, all for you guys. This is one of the ways that I will include it in one of the courses that I will be making, is how to understand, how to use order blocks and price action in such a way that you would know whether or not your trade, even while it is open, while you got triggered, and in between the entry and the TP, basically, it has a chance or not, right? One of the concepts that I talk about a lot is the idea of the market always has a test, right? There is something it needs to do, either break or respect, for your setup to work, okay? And it's more than just one. right? But for each scenario, each phase of the setup, right? For example, one test is it needs to respect this order block, right? That's one task. As soon as it doesn't respect it, it invalidates and it fails. Simple, right? But if it respects it, right, it touches, interacts with it, and then goes the other way, right, which is what we're trying to catch, there's going to be another test. And it's not necessary. Typically, it's not directly the TP. The TP is at the end. That's the last test, basically, right? The next phase, the next level that it needs to pass is it needs to start breaking bearish structure and creating new ones. Sometimes it does one and the other. Sometimes it does both of them. But it needs to do one of them for you to understand that is the sign of the market telling you that my entry is actually good, right? The fact that it's signaled doesn't mean you're gonna hit TP. Of course not. So one of the things you can do is look for structures that are going to stop price, right? So we have this H2, for example, order block, right? This is something that needs to be broken, literally broken, meaning it needs to close on this time frame above it, right? Above the order block for it to break. And this is a clear sign that you have actually caught a reversal. When it starts breaking bearish structure in this case, you can relax knowing that the market, not only you've triggered, your setup has triggered, but you're actually getting price action confirmation on a higher time frames, not the minutes, but the hourlies, that the market has actually turned in your favor. Okay, these are the things that you need to see in order to hold the trade. You can do active management, and I've talked about this before. You can do passive management, and I personally think that it's much better doing passive management, but obviously this is something for active, right? Knowing when to hold, when to not hold. But I still use it, even though I have a quite passive trade management. I still use these for certain rules that I have. At certain moment, I will close my positions, even if they don't hit TP. And it's by using these kind of, the market is actually currently breaking that structure. Okay, so as I said, this can happen. It does happen quite often. It breaks it, and that's perfectly fine, right? So if you may be stopped out, and just take the loss. It doesn't mean, it doesn't say anything about you as a trader if you take a loss. It's just a loss, right? You move on and you look for another opportunity. Okay, if you have data backing up your setup, you know that there will be losses, and you even have an idea how often they are, how long a streak they come in, and things like that. And a loss is just another data point in your set of data. But we'll see. It hasn't invalidated the area yet. It'll have to close there. We still have 2 minutes, and it looks quite likely to be breaking it and closing below it. We'll see. The setup isn't over yet. But anyways, as I was saying, you can even use the order blocks to understand if the market has changed direction or not, right? And it needs to change and starts breaking the order flow, right? That's breaking those structures. Otherwise, it's never going to go up. That's obviously, there is no other way. Let's see. I'm going to leave this open, but we can come back to this later, because this can take, at least on the 1 hour, this order block has been invalidated. This is the 1 hour order block. So this one has been invalidated. We take it away on the 2 minute, not 1 hour, 2 minutes, the 2 minute as well. All right. So it start breaking these order blocks, and it looks quite weak. It shouldn't be closing here, and you just have to catch the message. Then this isn't going to be the reversal, and that's fine, no problem. We'll just wait for the next opportunity, and we do the same. Obviously, when you understand that you don't have to catch many of these to be very, very profitable, because the risk reward is quite high. So you can lose the next 3 setups and just get one, and that will make up for all the other losses big time, no problem. All right, let's see let's check the chat. We can look at gold at NASDAQ. I see someone asking about Swiss yen and dollar Swiss pair. Let me mark them so we don't miss them. For sure, we can look that. We can look at gold as well. And okay, let's check. Hi, Luis from Ecuador. Welcome to our stream. Okay, I'm reading your question about my risk strategy, comparing challenge versus funded. Sure, I like that question. Is you're saying in your case you risk 1% for challenge phase and 0.5% for funded account. That is perfect. I like that, or perfect. I mean, I understand it, and I think it's adequate that you're lowering your risk once you get to the funded phase, because you understand that funded account is worth more to you. And this is the key here. An evaluation can easily be bought, right? But you can replace a funded account easily. There's a whole process, and it takes, for the majority of us, it takes many weeks, if not months, to reach that level, right? So it's not only about money, it's also about time. It takes a lot of time to actually get funded. And so you need to treat it with more respect, with more caution, because it's worth more. So, and that with that in mind, it makes sense that you lower your risk. One thing that I will say, Louise, thank you for this question, by the way, that if you want to know, actually, I don't have it. I should have it open. I'm going to open it in the background. I will look it up, share it with you soon in a couple of seconds. But I have a video that we did not long ago about this topic, about how much to risk. And let me see if I can find it quickly. And that will help you in finding what percentage to risk. Like 1% is very very popular to risk, but it may not be adequate for everyone. For some people it's just fine, but for many of others it can be too much. I'm going to let me see. This is it. I got it. All right, so I'm going to share it in the chat so you can check it out. There we go. Check this this video, Louise and anyone else thinking about how much they should risk per trade, and it breaks down basically what I'm telling you in summary. When you're talking about risk management and position sizing, you should customize that based on the strategy, right? It's not completely adequate or optimal to just do 1% regardless of the strategy. That is not the way to do it. The best way is to actually have data on the drawdown, the max drawdown, the historical max drawdown on that strategy, and based on your risk appetite and the importance of that account to you, you can base model or increase or decrease. But in any case, making sure that when it hits your max, the historical max drawdown, it doesn't exceed the drawdown permitted on the account. That's the idea, right? So you're using your historic max drawdown as a indicator of future max drawdown. It's not perfect, but it's the best, as closest as you can get to using the actual strategy to know how much to risk. And that is, in my opinion, the best way to know how much to, your position size. And obviously, you can still increase and decrease that fixed percentage based on your available risk capital, and depending on whether that account is a funded account or an evaluation account. Okay, so I wouldn't be able to tell you, Luis, to be more specific to your question, I wouldn't be able to tell you whether 1% is good for you or not, and whether 0.5% on your funded, because I will have to know data on your strategy, which I don't. Okay, but if you want me to look at your strategy, you can join us on the workshop, as I said, in Discord in about 1 hour and 45 minutes, or in private as well. And I can, just by asking a couple of questions, let you know how I would do it. And here we can see on the 5 minute, let's see if it broke it already. Yes, it broke the structure, right? That's the invalidation close, right? That close to me invalidates this order block. And to me, this setup is no longer valid, okay? Whether you close it at invalidation or not, that's up to you, up to your rules, right? Whether you wait for the stop loss to be hit or not, that's up to you. That's another thing, right? That's part of that discovery experience or that journey that each one of us has to go through to become a good trader, right? Don't let anyone tell you what is optimal for you. I'll give you some pointers, a lot, I would say, but you'll have to do the completion of that work. All right. Let me continue. All right, let's see. Enriquez is trying to buy 1570 on EU with a lower time frame confirmation. Let's look at why that could be. That is, of course, because of this order block. I would expect this low. No, not really. A little bit lower, perhaps something to the left. That would be. Yeah. Well, I don't really see the exact thing, but let's see. All right. So let's. I'm looking in the on the background here to what is okay. So yes, as I was saying, yes, I think that's a great idea. There are a couple of things that I want to say as well, right? A lot of the times we know how price the quasi, at least in my case, the quasi, I don't trade the liquidity grabs, right? If we have a certain level, like in this case, that price comes and fakes a breakout and comes back to then change. I do trade these, but not through the quasis, right? If they forms a new quasi, then of course I will definitely take the trade long, but I will trade that that will be a different strategy, right? After the quasi being invalidated and we see that it doesn't have follow through and actually comes back to go in the opposite direction. But that is not part of the quasi, at least not on the lower time frame. There might still be something on the higher time frame. Let's say on the hourly still not being invalidated, that this area is still there between these two yellow horizontal lines, and then it comes back and gives you some kind of another entry, right? After taking liquidity. But that would be a different strategy altogether. Although, let me check this one. We can, right? We can, after this is broken, we can look for the neckline would be here, right? So this setup is broken, right? It is invalidated. This order block is invalidated by that close, as we saw on the 5 minute. This is the 5 minute. But that doesn't mean that the market cannot create a new quasi, right? And the same area, when you do your back testing, you will see that it does happen from time to time. It's not going to be the exact the first quasi that gets reversed. Sometimes it's a second, Typically, the area isn't as wide to have a third one, but at some occasion that could happen as well. And not all of them trigger. So it's not that you're going to be taking long, get it stopped out, another long, you get stopped out. Sometimes it will happen, but it's not all of them get triggered. So if it doesn't get triggered, then there isn't a trade, obviously. Okay. Liquidity sweep, yes, of the London session. Exactly, yes. That's exactly what I mean. If that's another type of entry, not looking at the quasi necessarily, although you can combine them, obviously. You can look for the quasis after the liquidity sweep, right? Okay, let's continue. Let's remember, guys, hit the like button if you like our stream, if you like our content, the analysis we do. Hit the like button, subscribe to our channel, and we will. No problem, Luis. No problem. That's why we're here. Trump alert says void. Let's check is Trump talking? Yes, he is talking at the NATO summit. Currently speaking. That could move the market, perhaps, depending on what he says. If there's something new, something surprising, but the market doesn't seem to be surprised at all at anything is being said. Right? It is. That's about 10 minutes ago. I don't know. I'm not sure if he's talking already, to be fair. All right. Perfect. If I were to remove the mask, I would not be profitable. So that would be very difficult for me. All right. So yes, as I was saying, we have, let's look at another pair. You guys were asking me about some others, and let's do gold. I think gold is, as always, is a very popular one. Let's discuss the gold situation, the charts, and we can surely talk about it. The market on EU looks very, very weak, and the setup has been invalidated already. So I don't expect it to, reverse from here. But you can, have your. It can still happen, even though to me, it wouldn't trigger me. At least not this quasi. This quasi will not be able to trigger me anymore. If I get an entry. It would be from this quasi, right? This new one, the one that I just showed you guys, right? So it has to break this. It can even go lower. That's fine, as long as it doesn't close on the higher time frames below that level. And then it needs to break and then come back. And that's basically the idea, right? That can happen still in the next few hours. Okay, let's look at gold. Remember, you have in your hand the possibility of winning a 10K high stake account. Every day we have one for you. Easy. Only thing you have to do is go to the description, click the link, answer the multiple choice answer, the choices you have. So the answers. And even if you don't know the answer, just click any and see if it's the right one. If it's not, just choose another one. And eventually, when you have the correct one, that will give you an entry to the drawing, of the winner, that is on Thursday. 5 accounts for you. Each day we'll have one, and on Thursday we'll have 2. Okay. On the monthly time frame, I will not spend a lot of time. We have a very small body candle on the monthly time frame, meaning that there is the bullishness is getting, even out with some bearishness. That's how you create these candles. You have equal forces on each side, eventually net from comparing the open to the close, basically the body of the candle. And that tells you something about, at least in that month, price went sideways. And that's exactly what we felt. If you traded gold, that prices went, kind of sideways with a bullish undertone, but still sideways nonetheless. But other than that, there isn't anything for us to see. On the let's see, on the weekly time frame, there is a very nice area, a possible entry on the weekly time frame. Is it? I don't think that's a weekly entry. That's a regular weekly, not a weekly entry on the quasi, a regular one, and that's exactly here, right? So that this is powerful. If this triggers, you can actually try to hit a weekly target, right? And my weekly target, just to give you an idea, my weekly target, and this may sound outrageous, but my weekly target would be all the way here, around 3,673, right? So I'm gonna mark that. Let me get that straight, and I'm gonna let's mark that. Let's mark 3,670. Just make it a little less than that would be my target for the weekly time frame. If we have a reversal from here, we'll have to wait for the end of the week to see if that actually happens. But if it does happen, I did see the macro target. There we go. All right, so that's going to be my target. This level on gold. If it reacts from that level, the current level we are, this small little area here. So on the daily time frame, so we do have a weekly structure or a weekly entry order block. It is a fresh order block, so it will help us to use the as a signal. So it is considered in my to me that's a valid signal. If we get a reversal and we start creating bullish structures on the weekly, to me that's the sign that we have a good chance of holding this all the way through that higher TP that I just mentioned at 3670 and a little bit. Okay, so we do have a quasi on the daily time frame, which we do have a entry order block, and we are currently in it. It's not the only entry order block, right? So now you have alignment from the weekly and the daily, telling us both that we could have a reversal from the likelihood. Doesn't have to happen, right? But there is a good chance of price reversion from, if it is going to reverse, it's quite likely it's going to reverse from these structures, okay? So let's see. EU is falling, someone's saying in the chat. Let's see how it's going. I would say it's still hanging in there. The previous quasi has been invalidated, right? But I would still look for the possibility of a reversal. But price needs to actually form new quasis. If it doesn't form these new quasis, then I'm not interested. The low is 90.2, and this low is 90 as well. All right, so there is a little area here. I know I'm skipping from one asset to the other. Look at that order block. And this is a 1 minute quasi. And we are currently in it. And it is within that area. This is the area of interest, right? So it is perfectly fine, perfectly logical that price will reach. This is a very small quasi and possible reversal on the 1 minute. Obviously, you want to see this on multiple time frame, not just on the 1 minute. See how the reversal is? See that pop? That's not coincidence. That's the quasi. But that quasi is only 1 minute. So it's not enough to push price all the way out of this range. Okay? So it needs bigger structures on multiple time frames. That's why I keep saying that on the 5 minute, on the 15 minute, new structures being created that will tell us that the market really wants to reverse. So far, I'm not convinced. There's a little structure here, but it's on the 1 minute, and we see this reaction all the time. They don't mean that the market is going to reverse necessarily, although this is what you want to be seeing, right? You want to be seeing bigger candles being created. Look at that candle. That's an indication that the buyers are trying to reverse price, but they need to have that follow through, right? Meaning you have one reaction, price retraces back into that order block, but we need that follow through, right? If there is no follow through, the reversal is not going to happen. Very simple, but very powerful this is. Hola, David. David, hey, ¿cómo estás? Hi there. All right, so yes. All right, so we'll check this later. But let's look at let's go back to the gold chart, because that is what we were looking at. So we have that weekly order block, and we did have a daily quasi entry order block on the quasi. The only thing is that in order to use this properly, first is you need to wait for the price in this time frame to reverse. It hasn't yet, so it's not the time yet. And secondly, if you want to take the trade from this time frame, right, where do you put your stop, right? You could put it below that low. That is not a bad idea, but you should put the stop where the whole structure is invalidated. Okay, so since you don't have any other time frame, I wouldn't, it's not the time yet to go long on gold. I would say. By the way, we did have 2 order blocks on the daily being created, so there is quite some pressure for price to go deeper. That tells you that this order block can be pierced a bit deeper into deeper into that order block. Let's look at the H4. Let's see what we see. There isn't a lot. The quasi and this time frame is too big, in the sense that we do have one here, but in this time frame we don't have anything, unless we consider this one. This one has been already invalidated, so we don't have any order block, and it's above the 50%. So there isn't any H4 entry order block on the on the quasi. Let's go actually, and if the only other reason that we will need is something in here that tells us that buyers are coming in, and I don't see that. Sellers are still in control, as you can see. It's not looking at all as a reversal, so you have to wait the H4 to tell us that price is likely to reverse. That's not happening, so you have to wait for the market to be completely aligned. It's the alignment. It's like the alignment of the stars or the planets, right? It takes time. It takes a lot of time to have them completely aligned. That's the same thing with these time frames. Especially if you're using the weekly and the daily, you have to be patient. It's gonna be very rewarding, but you'll have to be patient. So the H4 doesn't tell me anything. We are in a demand zone, the daily demand zone, but there isn't anything here telling me that the market wants to reverse. Nothing, right? So in that case, I don't want to go long. I don't want to test my luck. This TP, you might ask yourself, what is that TP? That is from when we came from this area, right? We had an entry here, and the next structure, that's the next structure, right? So this is something from previously. Yeah, so this doesn't tell me at all that price wants to reverse, at least not yet. It might be in the making, but it's not showing its hand yet. What we can do is mark the necklines. So whenever it does start to reverse, we can spot it as a quasi being created, and then being ready to get into the trade. That is gold. I don't have anything else, because to me, once the H4 is not there, actually it's getting traction. This is a bearish outside bar. It's getting traction. The order flow is still bearish on the H4. That's not a good sign. To me, that tells me that there is a good chance that price might just continue to even deeper in this daily demand zone, which is that bullish structure. So I am not interested in going long. Short, there is some activity on EU. Let me look at that. I can hear it in the background. Okay, so this is looking better. You see that follow through? We saw it wasn't the actual point. It actually went a little bit deeper, but this is the kind of action you want to be seeing. You want to see the market switching back, being more powerful when breaking and creating these new candles, right? If it doesn't do that, then there is no way price is going to reverse. There is none, right? It needs to get back, and that's the order flow. That's the definite. You have to the equilibrium has to be tilted on the side of the buyers, and it seems to be the case right now. So we'll see how that plays out in the coming minutes. Right there, you see you have that follow through, and we'll see. Maybe it will, but and this I will explain. This is actually, it took me some time to understand this. Okay, so now we can understand that the quasi on the 1 minute has done its job, right? Once it went through higher than this this point, which was after the break of the neckline, the 1 minute quasi is done. Okay, it can continue to have effect, but basically that's all we want for it to do. Now we'll have to go to a higher time frame to see if it keeps on breaking these structures. And let's see if we can have an idea. The low, it's the same low. It's also an H2. And so you actually have not an H2, a second 2 minute. So the neckline, the quasi is also visible on the 2 minute. It's visible on the 3 minute as well. On the 5 minute, it isn't. The 5 minute is still here. So as you can see, it's not a matter of one thing that flips from green or from red to green, and that's it. Everything has, all the probabilities have shifted right away. It goes incrementally in one direction or not, right? So the next step, the next phase or test, as I was explaining earlier, the next test is for price to break this neckline, right? The more tests the price breaks and confirms, the more the probabilities are in our favor. However, when you trade with a very tight stop loss, it's a choice you make. Either you get in very tight with not having all the information yet, and you just let the probabilities work, or you can wait for these structures to break and then get in. That's a more conservative entry trigger. Obviously, you will have a stop loss that's going to be much, let me move this around. Your stop loss is going to be much, much bigger, which is not a problem necessarily, because you have a much more confirmation, you have much more data on your entry. So it's a give and take. It's up to you what you prefer to trade. Having more certainty, higher win rate, but your risk reward ratio will be lower, which is not necessarily a bad thing. Or you get very high win rate, or just high win rate, depending on how tight you put your stop, but you'll have to act when you don't have all the information yet. And this is an equilibrium that you need to find for yourself, the same way as I explained with the discovery of your triggers, right? Of your strategy, your system. This is also something you have to figure out for yourself, because I don't know you. I don't know the rest of your strategy. I cannot tell you if you should wait for that 5 minute neckline to be broken before you get in, or you can get it on the 1 minute, or what is the optimal combination or recipe for you. I can't say yet. If I were to tell you, I'll be lying. I'll be dishonest with you, because that's not how it works, right? Even though we want that to be the case, that's not how it works. Okay. My TP, if you're asking me, well, my TP, I would have an intraday TP. And that intraday TP, let me get the, I have a couple of TPs already set in. If I get a trigger earlier before I started the stream. One is, let's see. No, the actually, before I say anything, the TP would be, what time is it? It's London still has about 3 hours to go, so that's plenty of time. And the daily ATR is currently at, let me check. The currently a daily ATR is at 680, 84 or 85. So that means quite high, higher than my target from the swing trade that I have. And however, there is a weekly range, weekly ATR. I don't talk about this very much, but there are more things that I do that I don't always talk about, right? Because I want to keep it simple. But there's also a weekly ATR range, which the 100% of the ATR on the weekly is currently sitting at 47. Okay. So this is another area. 47 is a little bit lower. 47. And now, ideally, you want to be front running these levels, right? You don't want to have, for sure, you don't want to have your TP beyond them, and not even on them exactly. You want to have them front run. You want to have your TP be hit before price is reaching these levels. So if I have a TP that is so close to the previous high, right, from last day, from yesterday, then I would want to target that. I would rather target that level instead of the other ones that I have, the TP in this case of the weekly. Okay, that's why I have my TP there. It's not a coincidence, but that's not the only indication you could have in a TP. It's also what you have to consider. What do we have in these structures above here in multiple time frames? Okay, so on the H2, H4, if you want to, you can even read the H8, H1, etc., and until you get a feeling as to what you should target, because sometimes the market doesn't always break through these levels, right? Or at least, let me put it that way, it doesn't always break them at the time that you are in a trade. Sometimes it does, even if it is with the trend. Sometimes it just makes a lower high, right? And you need to gather your information. How likely is it to reach? You want to have a TP that is highly likely to be hit. You don't want to have something that is a little bit remote or has a lower probability. You don't want to be in that position. You want your TPs to be hit with good probability. So if you look at the H4, I don't see anything. H1, H2, I don't see anything. And in this case, they are two structures, right? Two order blocks here, which could be just as easily be considered for targets as well, right? It's up to you. You have to figure out these. I know I repeat this, but that's the reality of things. I'm not here to promise you simplicity or easy. You can do this with your eyes closed, but this is how it works. So this is the H1, and you can target this order block as well as your target, right? Depending on how the rest of the market looks. If it's very, very bullish, or if it's coming off a NFP movement, then I would say it's likely to just continue, right? Because NFP, as we know, is very powerful. And if there is a lot of ATR or a lot of range left on the day is still young, you could extend your TP thinking, okay, the probability isn't that remote, right? But as the day progresses and it hasn't reached it yet, it's unlikely that after London closes, right, at the end of New York, it's going to continue. Can happen, it will happen from time to time, but it's not very probable. And you want to be as in a position as high probable as possible. All right, so the first quasi didn't work, right? Didn't work. Was very beautiful, this reaction. Very beautiful. but still it did not work. Okay, but the second one, we didn't get an actually a 5-minute reaction, but we did get a little quasi here. You see that? A little quasi, tiny, but it was still reacting within this area. And that's that. You have to have context. Don't trade the quasis just randomly whenever they appear. That's not how you trade quasi. You have to, like anything in trading, you can't use something in isolation. It doesn't work like that. You have to have confluences. You have to have multiple time frames aligned. You have to have different things, different indicators, price action, all of them telling you that this is a great area, even though they can't guarantee you anything. Nothing can. But in order for you to have your odds in your favor. Okay, let me get back to the chat because I haven't looked for a while. Remember, guys, hit the like button if you enjoy this stream. If you think this is helping you, this is how I trade. This is one of the strategies. This is my main strategy, the quasi and the order blocks, even though I don't give you these very specific entry triggers. It doesn't matter, right? I give you enough tools and bits and pieces for you to form your own strategy, and that's actually what I want to achieve for you. But if you like this content, if you think that this is something that you like, you want to see more of this, you appreciate this, you think it's helping you, hit the like button. You already know what to do. Hit the like button, subscribe to the channel, and we actually hit 75,000 subscribers today. That means that when Jonathan comes back from vacation, we will have a very, very special, huge celebration, which is going to have a lot of surprises, giveaways. It's going to be huge. It's going to be big, beautiful, as our Trump would tell. I say our, not an American. As the president would say. The president of the United States, of course. All right. Someone asking about the quasi. Sure, I can talk about that very shortly. I understand that it may not be familiar for everyone, so let me discuss it very quickly. The quasi is nothing different than a variation of the very popular and the classic pattern of the head and shoulder, right? The head, let me indicate it with a pointer, the head, the left shoulder, the right shoulder, and the basis of the shoulder, right? This is a reversal pattern. It's a classical pattern. It has been has been used for decades already. So the quasi is a variation of this. The head and shoulder typically has a high degree of symmetry. In the case of a quasi, what you have is you don't have the symmetry, but you still have something quite similar to the quasi, or I mean to the head and shoulder, right? You still have a left shoulder, a head, a bottom of the first basis of that, the left shoulder, that forms the neckline. And that's what you want to break. Once it breaks, you have a quasi, right? And the quasi sometimes forms the right shoulder, and that's where I personally want to get in. But you don't have to trade it always. There are many ways to do that. Just ask Pedro from our Portuguese-speaking community. He has a plethora of ways to trade the quasi. I have tried different ways to enter the quasi, but I prefer to just focus on one and get really, really good at it because there are so many ways to do things, right? Even with me only trying to catch the right shoulder, there are so many variations to do that. There's so many ways to do it. So there's plenty of options for everyone. This is the quasi. Basically, it doesn't look like this all the time. You got to have a rule for what is a left shoulder. How do you recognize one? What is the neckline? You got to have a rule for that. What is the head exactly? It sounds obvious, straightforward, but you still have to have a very clear rule. Is this the head, or is it something, a little bit higher here or a little bit? You got the point, right? You got to understand what the rules are. And then my way is I trade the right shoulder. When price comes back, I understand that it has a higher likelihood to respond from something in this leg, right? This leg from the head to that lowest point of the structure. It will have a reaction a lot of the time, and a lot of the time that reaction is exactly what it needs to change direction. And then my initial target is the completion of the structure, which is that low. Sometimes I even take before that. And obviously, if I'm aligning multiple time frames, I'm looking to stretch that target to something on a higher time frame. That's basically the quasi the strategy that I trade in simple ways. We have asking about the order block. Sure, we can talk about that as well. But I will check. I will mark this for in a few minutes, and I will see in the chat if there's anything here before I continue. What's the name of this indicator? I'm not sure what you mean, Raj, or was it? No, Mark. I don't know which one. I'm not using any specific indicator here. I am, using, in terms of indicator, this is a naked chart, right? All of the drawings are made on based on the candlestick combinations or the open, the high, the low, and the close of the OHLC data point. So that's it. By the way, if this is very, very nice. I don't know if you guys noticed this, right? Where is price after having this impulse? I would say breaking out of those necklines. Where does it stop and consolidate? It doesn't mean it's going to continue necessarily, but where does it? Outside of that area, very nicely. This is the area that we're looking for the reversal. It goes outside of it as if telling us that it reached what it has to reach, and it has a pause. It may come back, right? That may happen, but just maybe it needs that pause before it continues, right? And the relationship that it has with this area, to me, that's a good sign. You want to be seeing that. You want to see the market react to your structures, to your areas, to your quasis, your order blocks, etc. Because that is tells you that it's visible. These structures are not you're seeing them, but more traders are seeing them, because those reactions, those are traders acting upon different levels being hit or respected on the charts. Let's see what else. Lazil says, better close the deal on the euro. It will fall. Thank you for that advice, Lazil. I appreciate it. You're taking care of me. You want the best for me. I like that. I appreciate that. Keep them coming. However, I personally, I don't follow. I just follow my trade plan. But thank you. I really appreciate it. Keep those good intentions in place. Let's see. Make the 5ers great again. We have never left being great. We have never stopped being great, Enriquez. Keep making the 5ers great. Let's see. The next milestone will be 100, perhaps 100. I'll talk to Jonathan if that's going to be the next. Here we go. Do we see price pushing a little higher? We'll see if we'll break the quasi. It's very early. This is just in the 1 minute, so you have to see it. This is as a reversal. This is very, very early in terms of things, right? It can still break and then still come back. It can still continue higher, still come back. Many things can still happen. This can even come back to this order block, right? There is a 5-minute order block here. And if you understand this about the market, you will be less panicky when the price comes against you, right? Price can still come back to this order block. And these are great entries still, right? Each time frame, the market is fractal, and each time frame will give you, well, not each all the time, but each has the potential of giving you a signal, and they're not going to come all together. So you might have a 1 minute, like a couple of minutes ago, and then half an hour from now you get a 5 minute, and you may have the 3 minute as well, and so on, right? It's understanding that different time frame, they mature and they reverse and reverse direction in their own tempo, in their own speed. Okay. Mahesh Daryanani, thank you for your question. So would you use quasi as a confirmation, or it's a strategy in itself? Well, it's a pattern to begin with, right? So it's a reversal pattern as a head and shoulder, and you can base your strategy on this, but this is just one pattern. The pattern, you still have to have rules, like when is the quasi broken? What are the better quasis? Where do you wait for your entry? What is your entry signals? And where do you put your stops and TP? As you can see, many variables, to build just quasi is just a pattern. You still have to build all those rules around it. I would say for your confirmation, you can use a quasi. Sure, you can use it for sure. The only thing is a quasi it's quite complex. It's not that complex, but I mean, a lot of things need to happen for a quasi first to form, and then to actually come back and form that right shoulder and have that reaction. So it's a very selective pattern, and price doesn't always use this specific reversal pattern to reverse. Sometimes it just has a V-shaped recovery or reversal. If that happens and you're only entering when you see a quasi on the lower time frame, that means that you're gonna not get the signal. That in itself is not necessarily a bad thing, right? You're being very selective by having the quasi being your entry trigger, but it means that your trade frequency will not be very high. That may be a good thing, but you have to balance that out with your personality and the available time you have. Okay, let's see what else. Vroba Analytics asking me about Jerome Powell, what I think about the news. Thank you, Roba. Roba, I understand there are people who actually have an edge in reading the market, reading the news, reading the numbers, reading the trends, reading the headlines coming out, and having a sense or an assessment, a probability of what is likely to come out at these specific news events. I'm not one of those person, right? So it's important to know where your strengths are and your weakness. And that's not something I'm strong in. So I have decided at some point in the past that I'm not going to let my decision or my opinion about these news, and I certainly will have opinions, but I will not have them influence or be part of my strategy. So my strategy doesn't look at my opinion or my assessment of what the news will be. I'm very conscious that you can have you can have an opinion, and that can help you, but it's something you have to figure out to see if you're the sources you are using, the structure you're using to get to your conclusions, if that's something you can do consistently, and that it gives you a better results than not using it. I hope I understand. I explained it well. So you can totally do that, but I don't have an opinion, or even if I were to have an opinion, I'm not going to act upon it. So I would say my opinion on what Jerome Powell will say today is just as good or bad as anyone else's, right? So it's not something you should pay attention to me, right? Because that's not something I excel at. Okay. I truly agree with this. Yes, the The5ers is the GOAT in the industry. We are the best, and I'm not afraid to say that. you are at the best prop firm of all. All right. Lisi. All right. Great. Okay. So as you can see, the area has worked quite nicely for the reversal. It doesn't mean necessarily that it's going to break all time frames and continue to go. That's not certain yet. But we can start asking price action to see, right? Look at the hourly, how that bullish order block is being shown. Hasn't been printed yet. We still have how many minutes? 20 minutes to go. Look at that order block on the H1. It's not definitive, right? So you can't use it for anything. But it's there. It's showing. This need to happen, right? And if it actually forms a let me mark this. If it actually forms right, you could have been waiting there and put it a couple of pips below that order block. We were looking at this in real time. Just go check the stream, right? That's the 1 minute quasi. This is the order block. Let me see if I can bring it back. This is the order block. It's not very visible because of that trade we have. Let me change that. Let me move this a little bit, like so, right? Okay, so let me put that way. I see. I see how the market is moving nicely. Some messages coming in the background. Okay. So this order block, which hasn't been formed yet, is that the correct one? No, yes, it is. This order block can still be retested, right? It's a fresh one. As we know, these fresh order blocks can still be retested as the market is moving away from it, right? So it creates it, it retests it, and then continue its way up, and likely, possibly to our targets. May or may not happen, but whether this happen makes the likelihood of the trade getting to your TP bigger. Okay, and that's something you can use. If there are things that the market does, like creating an order block, breaking a bearish one, that will increase the likelihood of your TP being hit, that's useful, that's valuable information, because you can use that in assessing, are you going to hold longer? Are you just going to take the profits that you have? Are you going to close at the end of the day? Are you going to close at the end of the 4-hour candle? Whatever rule you might have, knowing things that indicate, one thing over another is a great advantage. And you need to embrace these little information that the market will give us. Okay, let's see here. Okay. Okay. All right. Locke is saying his NASDAQ US technology index, the NASDAQ is doing well. Anyone else in the trade? Let us know in the chat. Very good question, Locke. Viewers, let us know if you're in a NASDAQ trade. We want to know. We want to know what's happening and what you're doing on today's stream. All right, let's see. Uzgur, you have a question for us here. Let's see. You want to know a 2 a.m. euro dollar long. All right, so you took a long at 2 a.m. Is that what time zone is that? Just let me know. Is that UTC or what time zone? Five minute. That's the time. That's the time frame. New York Eastern time. Okay, let's take a look at that. New York time. That is here. 2 a.m. along from 2 a.m. Where's your stop, by the way, while we're taking a look at this? 2 a.m. you said. Basically, that means here. You took along from here. Right there. Maybe the next candle. And I suppose your stop, if you're still in the trade, that means your stop must be below this area. And what is your stop and your targets? Or if you don't mind, if you don't want to tell us, that's fine. I will just tell you what I think. Well, since you have from the way you enter and you're still holding, you're likely looking at higher time frames, not on the minutes or even the hourlies. I don't know what exactly was your trigger, but I do like the fact, right? This is the candle, right? That is the candle where you got in at the beginning of, no, that's not the candle. This is the H, that's the daily. And so you got in at the, okay, I understand now why you got in there. Okay. All right, so what I see is we do have a order block, and this is one of the reason, the basis of the long that I took, actually the setup that I presented. I'm speaking my Trojan slips, speaking my mind. No, but this is the structure that is, to me, the demand zone of relevance, right? I'm gonna take everything off. It is this. This is the what I use. Osgur is I use candlestick combination, and specifically their OHLC data points, or where they open, the close, the low, and the high, to create the order blocks. So when I talk about the candlestick, I'm actually also talking about the order blocks, right? So to me, this is a bullish order block, which indicates a demand zone. And that demand zone starts here at the open of the close of this candle, which is at 1600, actually a round number, basically 16 round. And the lowest of that area is 1582.5, more or less, right? And that is the area, that's the demand zone. That's the whole idea of the fact that I'm expecting price going from, from where we are to push higher based on this order block. And for that reason, I think your setup it's a great one. That's what I can say. I don't know how you trade and what exactly where your stops are to know. Actually, not only, but I treat the order blocks are, to me, as demand and supply zone, which is another way of, support and resistance, right? Support and resistance, typically you understand it's a line or much more an area much more defined, and supply and demand typically an area much wider, but the idea is the same. Price will have difficulty going through from below, going through supply zones, and demand zone price will typically have, bounce from it, sometimes reverse, sometimes not. That's the same concept that I use for the order blocks, right? So I consider, when I see an order block, a bullish one, I consider that price might go there and bounce from it if it's coming from above. And conversely, if the order block is above price and it's a bearish one, obviously, that means that I would expect price to, when it reached that area, to have a reaction, at least a reaction, and maybe completely reverse. So based on that, I think it's a great idea. This is your entry. I don't know, the rest of your strategy, so it's difficult for me to tell much more than that. I don't know where your stop is and all of that, maybe below these lows, who knows. But I think I understand, at least from my point of view, it's a great one because it does have an H4 order block it has a demand zone to work on, or to work from, let me say, to react from. Yes, in the Geekis, I think that's completely right. If you can break most strategies as having some degree of support and resistance built into them, right? They're either, even if they don't tell you that that's the case, trend lines, they work as support and resistance, or supply and demand. Structures, order blocks, same thing. And previous high, previous low, session high, all these things, liquidity, they're seen as where price might react. So basically reacting from, so basically forming a supply kind of a supply and demand kind of reaction. All right. All right. Okay, so you were not in the trade, you got stopped out. You was trying to trade the Asian sweep. Okay, perfect. I understand it now. Perfect. I don't trade the session sweeps, like Asian sweep or London sweep. From time to time, I do catch myself doing it, but it's not something that I have a rule that I go check it. I don't typically look for them. Okay, but I will understand that this, even using order blocks, that there is a level here that might be a liquidity sweep, and if it does happen, then I want to be part of it. And usually I take these trades. That's a little bit different strategy that I use, and this happens to be a lot of the times a session low or session high, so a previous session, obviously. Let's look at the chart. We have it's a bit difficult to see, so I'm going to just eliminate this one, so we make it a little bit better. We do have that the quasi on the 5 minute, right? And price is pushing lower as we speak. Yes, no, not really. That's not one. So it just continued. And then we have the break of that neckline. And it's now coming to a possible reversal from that order block, right? We talked about this. I don't know if this is going to reverse or not. This may be just price continue. It might just continue lower, right? There is no guarantee at all that this might not happen. This might be just, the ebb and flows, the fluctuations as price is perhaps going lower. That is perfectly fine. However, what I try to do is to wait for price to come to these levels and get in with as tight as possible and target something on the higher time frames, right? And I'm going to have a lot of losses. I'll be honest with you. I lose a lot. I'm not afraid to say that. I lose a lot. Sometimes if you didn't know how profitable I am, you would think, like, why so many losses? And it disheartening sometimes to see, losses after loss. I can have streaks like 5-6 times losing streaks. And however, it doesn't affect me anymore because I know the data, I know how the numbers come out, and these streaks are normal. And I only need to catch one reversal, and it makes up for all those losses plus a lot more. And that's how I function, or at least that's how the strategy functions, right? The high risk reward, low win rate. But it's not for everyone. Not everyone can handle losses, that often. I sometimes it's less than 30%, 25%. I'm still profitable. 25% sometimes. And sometimes it's higher, but obviously that's not a problem because that means I'm very even more profitable when I'm at 40% win rate for some period, maybe a week, maybe 2 weeks, and so on. All right, so we have the market. The hour is finishing. Let's go to the 30 minutes to see. We spent actually almost the whole time on EU, but I think it's not a bad thing at all. You see, we have a 30-minute order block being created, has been retested. Let's look something between the 30-minute and the 40-minute. Look at that beauty. Look at that beauty. Look at that 45-minute time frame. I don't use it typically because I don't want to confuse people. But look at that order block being created on that time frame. I don't even have it here on the template because I want to keep things simple, right? To me, that move down was the retest of that 45-minute order block, right? You can use any, well, not any combination. There are certain general rules you have to respect between the number of time frames you use and the relations, the ratio between them. But you can choose any sequence. You can use 10 minutes and then 40 minutes and then 160 minutes and so on. There is no specific, because it's just a representation, a graphical representation of what price is doing, and price does it all the time. It's just not visible in all time frames. But it will be, if it is doing it, it will be visible on certain time frames. Osgur, I just mentioned, it is around 34%, 33%. I would say just around 30%, right? Sometimes it goes lower to even below 30%. I'm still profitable. That if it drops lower than 20%, then I'm gonna start breaking even for that period. But it doesn't happen. That obviously it fluctuates in time. Obviously, it doesn't happen that often. And sometimes on the upper range, it can go to 45, 44. I've had even above 50 for a very short period. And that's the fluctuation around 30%. But that's plenty. That is plenty. The only thing is that the losses and the wins, they happen like grouped, right? So it's not like one win, one loss, one win, one loss, but it's like 5 losses, sometimes 8 losses in a row, and then 5 wins in a row, right? Or 3 wins in a row. And since I have a high win risk reward ratio, as you can see, 7, and in this case even 11, and this is actually 6.6 is not that high to me. Quite high, but not the most. I can have it as a couple of pips, and you can see how the risk reward ratio jumps up obviously, and you can then understand that I only need a couple of winners every so often, and it will compensate for all those losses and even multiple of those losses in profits. So, but it's I would say it's not it's not easy on your mind losing that little. It's much more comfortable for your mind to have a strategy that has like above 50% win rate, something into the 70s, the 80s, because it's just easier for you to hold. All right, so let's see. We have Jao Lapa. Do you have? Are you part of our Discord community? Because if you are, maybe I can show a couple of share a couple of things on the Discord today, because we are at the end of our stream today. We only have about 2 minutes left. I don't know by heart, to be honest, what the risk reward ratio, the average was last month, but it typically fluctuates around 6, 5.5, sometimes a little bit higher. I even have sometimes, depending on the ranges, because it depends on the ranges of the formation as well. Sometimes because my TPs are based on the structures. So it's not a fixed ratio that I use all the time. It's not that I look for 6 or 5. Sometimes I only look for 3, right? It depends on the structure and how big the structure is in relation to the daily range, or maybe the 4-hourly range and things like that. So depending on how compressed the market is, I may have periods where my risk reward ratio is much lower, right? 3.5 is kind of quite low to me. 3, but that's for me. I don't mean that that's low for other people. For my strategy, from what I'm accustomed to see, it's closer to 6, 5.5, even 7. I've had periods, but I would say safely above 5 in any case. But sometimes I also have about 3, and it's not wrong. I've measured it many times, and there's nothing wrong with that. It's still profitable. It just, the market moves. at a different rhythm, than other times. And if you're using market structure, then automatically you're going to adapt yourself to the rhythm of the market, because those are the limits, the ranges, the structures that the market is giving you as, supply and demand. To me, that's the best way. Not having fixed ratio, although I do understand that, probabilistically you can perfectly have a fixed risk reward ratio, like 1-to-1, 1-to-2, and be completely very profitable with it, right? And if that's how you want to, do it, that's perfectly fine, as long as you have hold on, total R gain on your account. Okay, perfect. I think I didn't understand that the R multiples that I get. Well, on the last month I had 67, if I'm not mistaken, 67 R I gained. That is last month. That fluctuates. That's not a big month, but that is obviously that's a solid month, but it's not the like I've had months over 100 R's in a single month. All right, that's it for me today, guys. 2 hours has flown away. I would like to thank you all for being here. I would like to invite you to be part of our Discord workshop session that I'm going to be holding in about 45 minutes. I'm going to get my coffee ready, because the session is called Coffee with Traders, and that's for a reason. And I would like to tell you to hit the like button, subscribe to our channel if you think this is helpful. I keep saying this, but it's for a reason. The more likes we get, the more subscribers we get, the algorithm of YouTube will understand that this is something that they need to propagate. They need to suggest to other users as well. So in the spirit of helping as many traders as possible, hit the like button. You're doing good to others as well, because they will have a better chance of being suggested our stream, and that will help for our cause, right? What we want here is just show you authentic traders as much as possible, sharing as much as possible of our strategies, so that you can grow and learn from it, right? You don't have to agree with everything I say. Just test it and see if it fits your personality, if you see edge in it or not. And if not, just the fact that you're here engaging us is already very helpful to us, and also for you, probably, because trading is a quite lonely experience or activity. It's good to have others as well around you trading, even if they are doing other strategies. It doesn't really matter. EU is going ballistic. That's the news, of course. Look at here. It's going, well, ballistic is a big word, but it's having 2 big candles, and that's the news that just came out. Actually, I don't even, what news is it? Oh, it's the chairman speaking. And there's also yes, it is the test. Powell is testifying. All right, so that's it for me. I hope you enjoyed it. As I said, don't forget to hit the like button and subscribe. See you tomorrow, and don't forget that there is a chance for you to win the account. In the description of this stream, there is a link. Click it. Have a chance at winning a 10K account of the 5ers. And the other days, the link is still active. So, make use of that little opportunity. I wouldn't say little, that opportunity, very nice opportunity for you to participate in Monday, Tuesday, and today's giveaway as well. The winners will be announced on Thursday after midday UK time. Thank you for your attention, and see you next time. Bye-bye.